Look at where we are on sentiment, and they're up by just 0.1%. US two-year yields of interest because we saw a substantial drop in those yields during Friday's session. Rate-sensitive, short end of the curve, of course. Today we're seeing those yields go up just a fraction, so maybe consolidating on the moves of Friday, or at least just pausing after we saw those moves of Friday. 85.60 is where we trade on Brent, up by 0.8%. Over the weekend, we heard from the Saudis and the Russians. They've confirmed the supply cuts that they put in the market. They're continuing to commit to those into the year end. So certainly we'll watch what's going on with Brent and anything related to it. Let's have a look at where we are on futures. We had been expecting a fairly flat start of trade, pretty flat still, a little bit of upside bias. So DAX, FTSE futures and CAC futures all up by 1 or 0.2% this morning. We have plenty of earnings coming through this week, so that'll be something to add to the mix after we got lots of earnings last week, of course, but a lot of macro themes set in course by the Fed, and then, of course, bookended by the non-farm payrolls report. Let's have a look at where we open up then. Well, open flat on European equity markets. The FTSE 100, the first out of the gates, and is flat this morning, so not going anywhere very fast, above that 7,400 level. A little bit of weakness in the US dollar, so some of that risk on perhaps continues from Friday. We do see the euro and the pound both almost entirely flat this morning. This is the interesting sovereign bond story. So as I mentioned, during Friday's session, certainly on treasuries and certainly at the short end, we saw those yields coming down, reflecting the fact that we may be near the top when it comes to US rates. And today looks a little different here in Europe. We see European rates going higher this morning. The UK 2-year I can see just opening up and follows that same pattern that we see from the 10 and 30-year in other parts of Europe. So we do see yields going just a little bit higher here. And this is interesting on the natural gas side. We just got some confirmation this morning that European and specifically German storage both at 100% levels as we head towards the winter, still with some fairly warm weather. And these are the higher oil prices that we were referencing just a moment ago. Let's have a look at sectors and see where we are there. So a little bit of upside coming in on some of these markets. In particular, I noticed just there, as we just moved screens, I noticed that Italy was pretty strong, and obviously that has to do with telecoms. So just looking to see if we've got anything on the telecom side of things. I see utilities up just 0.1%, banks doing okay, financial services, industrials, retails. So not many sectors actually in negative territory, just food and beverage just down a fraction. Stocks Europe 600 up by 0.3%. Modest gains then coming across these European equity markets. Sam Armstead joins us from our Markets Today blog and can take us through some of the market thinking here. Where do you see the market mood is at right now then, Sam? Because we talked in the last part of the programme about how we'd seen a strong performance for UK stocks, a strong performance to some degree for a lot of European stocks last week. Where do you think the mood is right now?
Yeah, I mean, actually a strong performance for US stocks as well. As you mentioned earlier, the S&P 500 also had its best week in a year. I think what you had last week was a kind of classic bad news is good news for stocks. So the rate story has been dominating it. The central bank story has been dominating the narrative for quite a long period now. That has started to shift a little bit, towards not just higher for longer, but to when rate cuts may eventually come. That has boosted stocks, but that then has to be set against that bad news, so that the economy is weakening. So yeah, for right now, that's good in terms of the rate story, and certainly for stocks. But is that going to eventually start to weigh on equities? And certainly as you go into 2024, maybe the picture isn't quite so rosy.
Right, and I wonder where we are on the higher for longer narrative then as we go into the end of 2023 and into 2024, because that's what central banks have wanted us to think. They've been talking about leaving rates higher for longer, so even if we do get eventually to some sort of inflation goals, not necessarily assuming cuts, but the market is is very quickly starting to factor in cuts. We talked about the UK, but also over in the US on the Fed.
Yeah, I mean, really with most major central banks, and I think what you're seeing, so it's the higher for longer story, but what you're also consistently seeing is these kind of hawkish pauses. So at the moment, that story's not quite over. So there's still at least a risk that more rate hikes may come from the Fed, possibly from the ECB, we shall see. But that story hasn't quite played all the way out yet. And I think as you go into 2024, once that story probably has started to play out and you come into earnings, particularly earnings in the first quarter of next year, you might well start to see the outlook start to darken a little bit because of the weakening in the economy.
Yeah, that'll be really interesting. And also the RBA in focus, thinking about global central banks, the RBA is sort of 50-50 which way they go this week. So that'll be interesting in the context of that global narrative sort of evolving. Let me ask you about treasuries, but from a different angle. We had a big take story recently about hedge funds increasingly playing a role in treasuries markets. And you're drawing our attention today to a story about hedge funds being catapulted treasury shorts to records just at the wrong time.
Yes, exactly. Yeah. Just a very poorly timed, I suppose. Treasuries have been so volatile, for the last few months. I mean, my background is in stocks, so I've not watched treasuries for years and years and years. But certainly, the people I sit next to who have been doing that say this is an extreme amount of volatility. Some of that will be down to hedge funds. They got on the wrong side of this bet because bonds moved a huge amount in the last 2 days of last week. We shall see, though, whether that continues.
Okay, Sam, thank you very much. Sam Alstead from our Markets Today blog. You can get more from the team that puts together the blog. Go to the Bloomberg UK website, click through to the blog from there, or you can type TLIV Go on the Bloomberg terminal. Let us get an update on one of the big corporate stories of the morning. Telecom Italia has approved the sale of its domestic landline network to the US private equity giant KKR for 22 billion euros. The deal is expected to close by next summer. Let's get all of the details now from Bloomberg's Chiara Albanese, who has been following the story for us. Chiara, why is this deal so important then for the company and for the government? Because the government has notched up a bit of a win here.
Good morning. So the deal is very important because it was far from granted that with all the opposition in the boardroom, we would have gotten to such a decision that was taken last night. Also, without calling a shareholders meeting, which is something that the main investor of Telecom Italia, Vivendi, had been vocally asked. So it is a clear steer and decision for the company that is going to be boosted by the government and by the main executive of Telecom Italia, the CEO in particular.
Yeah, and what happens now then, Chiara? Because, of course, we know that the main shareholder, Vivendi, the largest shareholder here, not to mention some other much smaller shareholders, are unhappy and seeking legal action.
Exactly. Now the battle starts. Once again, we could say, because this has been going on for some months, but we should expect Vivendi and also other minority shareholders like Merlin to come up with some legal actions that will require or force, or at least ask the Telecom Italia board and management to call a shareholders meeting in which they could assemble sufficient votes to block the sale. At the same time, the government is watching, so trying to persuade and facilitate that the deal will continue. So even if the direction is set, how quickly the finishing line will be reached is still very much unclear.
Chiara, thank you very much. Bloomberg's Chiara Albanese with the latest on Telecom Italia. I can tell you those shares took a little while to open this morning. When they did, jumped up by over 5%, up by 5.4% at one point in the early part of trading after they've approved that network sale, of course, to KKR, but just moderating those gains a little, now up by 2.5%. Let's step away from the individual micro stories and take a look at some of the events that we'll be following for you throughout this week. This morning, we'll get PMIs from Italy and the broader Euro area. We'll start to get those in a few minutes and we'll build up a picture of the Eurozone services sector throughout this morning. Tomorrow, it's the RBA's rate decision that will be in focus. Also, UBS earnings will be a focus for the banking sector. On Wednesday, it's Poland's rate decision. We'll also have earnings from Disney and from Air France. That's followed by Chinese CPI and PPI, as well as US initial jobless claims on Thursday. And finally, on Friday, UK third quarter GDP. And over in the United States, we'll get that reading of consumer sentiment from University of Michigan. Coming up on this program, Ryanair shares fly high after the airline announces its first ever dividend. We'll discuss that next and look at other stocks moving this morning. This is Bloomberg.
your economy and Greece? And when you look at tourism, it's booming, but it also means some of the islands are overcrowded.
Exactly.
Is there something that you can do about that?
Thank you for asking this question, because I want to make sure that, in 5 years from now, we will not have sacrificed, the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focusing on sustainable growth. That's why I will always push for quality over quantity. Very strict in terms of standards. We are actually looking at our local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to protect, especially islands, which are more sensitive.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew, alongside Kaylee Lines, deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
This is Markets Today, 10 minutes into our European trading day. And European equity markets making modest gains this morning. Let's get a check on how the individual stocks are performing. Joe Easton has an update. Joe.
So Ryanair up around 5% at the moment over in Dublin as they announced their first ever dividend payment, returning around 400 million euros back to shareholders. Their ticket prices are tracking around 15% higher than where they were a year ago, according to that statement as well, helping them to return some of those funds to investors. Also in aerospace, we've got Melrose, the UK engineer, doing a deal with General Electric for some engine work together. They're in a new pact, expanding that, and it's worth around $5 billion for the British company, so a pretty big deal for them. In terms of those telecom stocks, Telecom Italia was in a trading halt, but that does look to be ticking again now, up 2.9% at the moment. They are selling their landline business, 22 billion euros to KKR, the private equity company. Also reminding us that people do still use landlines, which does come as a bit of a surprise, I have to say. PostNL, meanwhile, this is the Dutch postal company, basically the Royal Mail of the Netherlands. That one slammed today, down 13%. They are seeing a decline in some of their volumes, one of the big beneficiaries of the online boom. But as the cost of living crisis comes in, we're seeing all of those stocks hits today, and that is the worst performer on the Stock 600 at the moment. In terms of the second board, there's quite a lot to get through today. Kingspan, another decliner. This is a construction company, another one based in Dublin, but also has a big US exposure. They do insulation, that kind of thing. A bit of a warning from them. We're seeing Harbour Energy ticking slightly higher. The UK set to annually renew North Sea oil licensing costs for those companies. Now that one is getting a little bit of a boost, not as much as you might have expected, but Harbour, Serica, all of those smaller companies in focus there. Orpea, this is the debt-laden care home company over in France. They're doing a capital raise, potentially helping their balance sheet. So that one getting a bit of a boost. Doesn't seem to be ticking at the moment. We might get some delayed pricing on that one later on. But a big decliner in Germany is K&S. UBS downgrades the maker of fertilizer to sell. They supply the farm industry into areas like corn and other crops, that kind of thing. That one hit today as UBS recommends selling, down 6% over on the DAX index. Then on the final board, we got some big rating changes today, one of which stood out to me was Ferrari, a new overweight over at Barclays. They say that the company's brand does remain the strongest among all those car makers, including Aston Martin and the other big peers as well. So that one gets a new buy rating over there. JD Sports has another positive view, this one over at City. They say the stock is worth around 220 pence a share. We can see where it trades now, 134 almost, so a big bit of upside according to them. The seller of Nike trainers. Hypnosis songs. Now we're going to bring Elton John into this segment today because the owner of rights to Elton John and other bands like the Red Hot Chili Peppers, all of these big brands, they are cancelling their dividends, saying they're having to pay too much out to their artists for royalties, and that is hurting them. That is hurting their profits, cancelling their dividend, as I say. And finally, next, this one is cut to sector perform over at RBC. A bit of cost of living concerns for next, heading into the Christmas period. That one ticking lower by about 0.7%.
Interesting. Couple of dividend stories then, moving stocks this morning from Hypnosis to Ryanair. Joe, thank you very much. Joe Easton from our equities team. Thank you for joining us. Let's speak now to Annika Trion, Chief Economist at Van Lanschot Kempen, and get her thoughts on, the global economy, but also let's start with stocks. Annika, very nice to have you with us. I know that previously we've spoken and you've asked questions about whether it really makes sense to be in stocks when you can get such high, relative to recent history, rates from fixed income and the like. So where do you stand on stocks right now?
Yeah, well, Anna, so good morning. Great to be back. We've maintained a relatively cautious stance throughout, looking at the fundamentals behind stocks, which is earnings, and next to that, mirroring that with valuations. And you see yet another very strong earnings season, especially in the US, but still we see the issue that earnings growth expectations, both in the US and in Europe, are high for 2024, and especially looking at Europe and looking at the fact that corporate profits were down double digits in Europe, that remains worrying. And alongside that, again, 5% rates almost risk-free in the Treasury market is a very interesting alternative.
Okay, let me come to some breaking news. We're just getting some numbers coming through, Annika, on the Bloomberg terminal. So I just want to get to this latest update on the Eurozone economy. This is actually for Spain. So Spain, October services PMI rising to 51.1. That was versus 50.5 in September. So that's in expansion territory. It's better than the month before. That means the composite number, though, has fallen from 50.1 to 50. So not much of a movement. I suppose pretty flat then overall for the Spanish economy. When you look at that composite number, not a great deal of expansion or contraction. This is building us towards a broader picture of the Eurozone economy, Annika. Your thoughts on the Eurozone economy then as we get this picture building up through the data?
Yeah, so Anna, let's look over the last year. The Eurozone economy has barely grown. So it's been a really anemic growth situation. However, bizarrely enough, the labour market has actually stayed quite strong. And that's what's left this ECB with this really complicated puzzle where we see the economy much, much slower. Also interesting, by the way, the economic cycle between the US and Europe seems to be diverging so much now. And that's also why if you look at what the future rate path of Europe needs to be, what the ECB needs to do, there's always the old pattern. The Fed moves first and the ECB needs to follow. Well, maybe this time simply isn't that case because the cycles are so different. And you see this persistently, whether it's economic growth figures, whether it's sentiment figures, whether it's leading indicators, whether it's corporate earnings. It's the same story over and over again.
Okay, so you see that the ECB could actually go earlier in cutting rates than the Fed. What kind of lead time between the two should we anticipate, Annika?
Well, Anna, I think that's a tricky one. I mean, the good news is the following. A couple of months ago, the market was very excited about rate cuts already happening this year, which we thought was far too ambitious. That's already been priced out of the market. Market participants only expect rate cuts to happen next year. For Europe, only around spring of next year. That looks reasonable. Could the ECB start off and the Fed follow a few months later? That could also be reasonable. But the issue is obviously it all depends on how data is continuing. And central banks have told us they're very backward-looking. They're very data-dependent. So we know as little as they do, unfortunately, about how the next quarters of data will pan out.
And you mentioned a moment ago the earnings story, and I just wanted to deep dive into some of that with you, Annika. We had some interesting analysis done by Bloomberg Intelligence, which has been doing some text analysis on some of the worries that CEOs have had during the latest earnings report. And it's interesting because a lot of the assumptions where we'd seen negativity and stocks selling off because of weak outlooks, a lot of the assumptions have been, oh, well, that's because CEOs are worried about growth. But actually, and we've got a quote of what they've been saying. It's fairly long, so I won't read it all on the screen. But it basically says that actually CEOs are still worried about inflation, not worried about recession. This coming from this broad sort of text analysis. How does that fit in with your thinking, Annika?
It fits in absolutely, because the biggest issue that we have in the economy right now, especially in Europe, more than the weakening of the economy, is the inflationary pressures, because this is sticky stuff, especially around the service sector. And that's why, I mean, let's think about it. It is bizarre. The economy is weakening. We see cracks everywhere, yet the labour market continues to be strong in Europe, which means wage pressure, which means, again, inflationary pressure into all sorts of areas of the economy, but especially given that the economy is more services orientated than goods orientated, that makes it worse. And I think imagine you're running a company today and you've just had all these struggles hiring the right staff over the last couple of years, given the tightness in the labour markets. You're not going to be easy about letting your staff go because you're concerned. And you're concerned about being able to hire them back later. And that's exactly what we're seeing across the board. So that's what we're worried about. We're worried about the price pressure story.
So labour hoarding, Annika, is that how extensive a feature of the Eurozone economy is that?
Well, I think we believe that labour hoarding is across the board. It's not a European issue per se. But I think that the reason why it's a bigger issue in Europe is the US is in a much more, I wouldn't say straightforward situation because it's complex, but the economy is extremely strong and inflation is there. And that combination of the two is palatable. In Europe, the economy is actually very, very weak. In fact, we were heading into a recession prior to COVID. We averted the recession because of this huge amount of stimulus that came in, but our economy is just not strong enough. And with that footing, also having persistent inflation, that is the stagflation issue that we all hate, essentially. So that's why it's a bigger issue for Europe.
Annika, thank you very much. Thanks for your time. Annika Trion, Chief Economist at Van Lanschot Kempen. Coming up on the programme, it is a busy week ahead for European earnings. We were just talking about some of the themes there. We've got plenty of big names reporting. We'll have a full preview for you next. This is Bloomberg.
This story did come around as something that's a bit different. There is a dark side to it.
It's hard to even talk to people about these chemicals and tell them, look, there's a chemical that's in you that's not found anywhere in nature.
We've all been used as guinea pigs for the last 70 to 80 years. We weren't told we were being exposed, but they did it anyway.
This right here is the shadow fleet. To actually see clandestine behaviour was really surprising. That makes you think, well, what else is going on?
A lot of people let Agnes down. What she was told is exactly what happened to her.
It took the lid off a much bigger problem. I think that's probably the most shocking part of this whole thing.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Slice through the noise.
Forget the noise. Ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
This is Markets Today. We're 24 minutes into our European trading day, making some modest gains across European equity markets. US futures point just a fraction higher, up by 0.1%. Back here in Europe, it's another busy week ahead for earnings. Companies in the telecoms, energy and consumer sectors will all be reporting over the next few days. UBS, Commerzbank and ABN AMRO are among the names in the banking sector that we're watching out for. There's lots more besides. Let's talk to Bloomberg's Maggie Shiltak, who has a briefing for us on what to expect from the earnings stories that are due out this week. Maggie, good morning once again. So UBS in focus tomorrow. What do we expect there?
So very highly anticipated set of results from them tomorrow. It's going to be the first full quarter that includes Credit Suisse. So investors will really be looking to get a little bit more of a gauge as to where the long-term value of that integration is really going to come from, as well as honing in on that key talent retention across the business. Attention is also going to be on their wealth flow and deposits, as well as their pipeline going forward. Equities trading makes up a higher proportion of their revenue than many other banks, many of their other peers, and we've seen very strong results in that arena elsewhere, particularly in the US. Strong results from Goldman Sachs and Morgan Stanley in that arena. They beat analyst consensus, so that bodes really well for the bank tomorrow.
Okay, so that's one element of the banking story this week, but we're going to hear from a lot of other European banks. What will we be watching for there?
So I think one of the key takes from this season is that the US banks have really been outperforming the Europeans this season as their economy continues to do very well. On the flip side, we're seeing a bit of a slowdown in Europe, and it'll be interesting to see how far that goes and whether that will have an impact on demand for banking products going forward, and whether we will start to see a bit more of a transatlantic divergence as we go into the rest of the season. Lastly, as we talk more and more about interest rates reaching their peak, I think this will put a lot more pressure on banks to source other forms of revenue and increase their demand that way.
Because that's been something that the rising interest rates have been something that's flattered them of late. Just briefly then, Maggie, we're going to get telecoms as well. We talked about Telecom Italia a lot this morning, but there are other corporates reporting.
Yeah, definitely. So we've got Telefonica coming up on Wednesday, followed by Deutsche Telekom on Thursday. Now, the real focus for both of those there will be shareholder returns as well as the outlook for their cash flows. Now, Deutsche Telekom set the tone very nicely for itself last week when it announced that it was going to be increasing its dividend for the year by 10%, as well as buying back around €2 billion worth of shares in 2024. Now, Telefonica, recently described as Spain's most strategic company, its results are going to coincide with the Capital Markets Day. So the focus right there is going to be more on its strategy going into the midterm, as well as its outlook for its cash flow going forward. And as you mentioned, a lot of news from Italy from yesterday. All eyes are going to be on the Spanish government and their next move.
Yeah, absolutely.
With that tomorrow.
That link between the government and these important infrastructure businesses. Maggie, thank you so much. Bloomberg's Maggie Shiltak joining us with a preview of the earnings stories still to come. Coming up, we unpick the struggles of Europe's biggest economy at a political crossroads. Today's Big Take dives into the German story for you. We'll get an update on that from one of the authors of our Big Take story. This is Bloomberg.
what do you consider to be the biggest challenge?
Infrastructure that supports trade is the biggest challenge. Our senior brother, President Adesina of the AfDB, estimates the annual deficit, infrastructure deficit in Africa to be over $100 billion. But that over $100 billion is actually also an opportunity for investment. So it is a massive, a significant challenge that we are confronting. And my fear is that we may succeed in establishing a very effective legal construct and a very effective legal foundation for trade liberalization and investment liberalization in Africa. But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow, and you will need to have good trade corridor connectivity, ports, trade corridors that connect countries that are landlocked to the ports.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
This is Markets Today. We're 30 minutes into your European trading day. Here are your top stories. European stocks follow Wall Street higher after the S&P 500 has its best week this year on hopes interest rates are near their peak. Deal done, Telecom Italia gains after it approves a blockbuster sale of its landline network to KKR, despite opposition from its biggest shareholder, Vivendi. And Israel says its troops have encircled Gaza City as U.S. Secretary of State Anthony Blinken continues his diplomatic push in the region, which now takes him to Turkey. Welcome back to the programme, everybody. We're half an hour then into the start of the European trading day. So let's have a look at where we are across a number of assets. And the Stoxx Euro 600 really pretty flat. The DAX pretty flat. The FTSE 100 flat. A little bit of upside bias. But all that positivity we saw through the Asia session, really Friday's story from Wall Street. We saw a lot of optimism around the jobs report coming in weaker than expected. A lot of people joining the dots then and then assuming that the Fed is nearly done when it comes to rate hikes, or maybe entirely done when it comes to rate hikes. And a lot of the conversation has turned to thinking about, well, when do we get rate cuts from the ECB, from the Bank of England, and from the Fed, of course. So this is what we see across European equity markets right now. Let's have a look at the sectors, though, and take you through that, because actually the sector picture is quite interesting and telling you a slightly different story from Friday, I should say. So maybe a little bit of a pause in that narrative that we saw on Friday, because real estate was one of the best performing sectors during Friday's session as a result of people thinking, well, maybe we're done with the hikes. Well, actually, it's one of the weaker sectors today. It doesn't appear on this board, it appears, but real estate is one of the weaker sectors here in Europe, along with consumer goods companies, along with food and beverage and utilities. So an interesting breakdown there of the sectors. I was just looking for travel and leisure, and there it is, up by just over 1%. A return of dividends as a driver for sentiment, it would seem. Ryanair moving higher as a result of a dividend pledge, the first to come from that low-cost airline. So that's what we're seeing across the sector picture, fairly evenly split, actually, in terms of positive and negative sectors across Europe. So this board giving slightly more emphasis to the upside, but we're pretty flat overall on European stocks today. Time for your Bloomberg Big Take story of the morning. As the EU's biggest economy wrestles with a persistent slump and a surge in immigration, the spectre of German nationalism has returned. It's leaving citizens more conflicted over their country's direction than at any point since World War II. Joining us now is Bloomberg's Chris Reiter, who co-authored today's Big Take story. Chris, very nice to have you on the programme. Let's dive into the domestic political picture then in Germany. What does the domestic political story look like right now, and how did we get here?
Yeah, thanks, Anna. I mean, in a word, it's fragmented. And it's not just the rise of the AfD, but it's also the decline of mainstream political parties like Olaf Scholz's Social Democrats. And that's because, as what you alluded to, there's been a series of crises that have hit Germany kind of in quick succession. Especially last year, there was the energy crisis that was set off by the war in Ukraine and Russia cutting off natural gas. And then more recently, you've had a migration crisis. There's been a serious spike in migration, and all those, and the economic malaise, and all those add up to a lot of uncertainty for German voters. And they're turning to other parties for answers. And right now, the AfD is rising.
Okay, so the AfD rising in terms of popularity within Germany. In that context then, Chris, what is the future for Chancellor Olaf Scholz? As we see German politics fragment, more support for the right, is Scholz able to hold off the AfD?
Well, that's going to be the difficult thing for the next 2 years, as long as his government is in power. I mean, right now, the three parties, the AfD is ahead of all three of the governing parties in polls right now. And there's been a series of infighting and bickering between the coalition, which has further undermined their position among the public. Frustration is widespread. So it's hard to see, and that's what makes it difficult right now with the fragmentation in German politics, is that Germany becomes less governable, less predictable, and it's harder for Scholz and company to get those reforms that Germany needs so desperately to get its economy and get its stability back on track.
Yeah, and interesting to see what other parties in Germany decide to do with the rise of the AfD and the extent to which they will or won't work with them. And that's been a topic, I know, in previous elections. So is this move to the right a trend that we're seeing beyond Germany's borders then, Chris, or is there something very German-specific about this?
It's a widespread phenomenon. I mean, you've seen the rise of populism across Europe. I mean, the U.S. also. So the issue with Germany, because of it's at the center of the EU and the AfD's policies, which are focused on weakening the EU and even potentially like pulling Germany out of the Eurozone, is that there's a very major and significant shift that could happen within Europe if the AfD gets even more power. And we've kind of seen some rhetoric from the mainstream parties trying to shift towards the AfD. So some of those changes are already in place. And so, as we get into next year and closer to the national election, there's potential volatility at stake.
Chris, thanks very much. Thanks for the update. Bloomberg's Chris Reiter in Berlin with that story on German politics, the fracturing we're seeing and where that leaves various coalitions. You can read more in today's Big Take story. Visit Bloomberg.com or search NI Big Take on the Bloomberg terminal. Staying with the German story, the Vice Chancellor of Germany, Robert Habeck, says he's concerned about growing anti-Semitism in the country amid the Israel-Hamas war. Here's some of my exclusive conversation with him from last week.
It seems like, compared to other horrible events, the solidarity with Israel is very, very weak, or it seems to be weak, only on a rhetorical basis. Therefore, I just tried to divide the things and say, okay, the suffering in Gaza is terrible, but of course Israel has all the right to protect itself. And in Germany, we have a special history. We have to support Israel. That was the sense of the radio.
You're right that lots of Western governments are also dealing with these same questions. How do you allow people to show support if they wish to for the Palestinian people, but at the same time make it clear that you don't want people to be supporting Hamas, and that is not tolerable in Europe? How do you find the line? Because lots of Western governments are dealing with the same issue.
Well, first of all, it's a line the pro-Palestine demonstrations have to draw themselves. I'm also for a sovereign state for Palestine and the Palestinian people, and I think that the suffering is horrible, and they have also the right for solidarity and humanitarian aid and so on and so on. But saying that and demonstrating for that does not mean to do anything, any relativism on the terrible slaughtering Hamas has said. So they have to draw a line themselves and say, we want to help the Palestinian people, but we don't accept Hamas. Hamas is not fighting for the Palestinian people, they are fighting to destroy Israel. And this has to be clear all the time.
And why did you feel the need to speak out on this? Should it be Olaf Scholz who is leading this conversation, the German Chancellor? Why is it left to you as Vice Chancellor with all your other ministerial responsibilities to make these points?
Well, he does it all the time, actually. Olaf Scholz, he holds the speeches in the German parliament
Parliament and in an international conference.
You don't think he's getting the message wrong at all?
No, he's doing a great job, as a lot of leaders of the world are now doing a great job trying to ease the situation. Right now, Secretary Blinken is again in Israel, and I know that the U.S. government, President Biden and Secretary Blinken, they are really working hard with the Israeli government, as we do, to give them support in this difficult situation for Israel, but also making clear that also Israel has to stick to the rules of international law.
Thinking about U.S. foreign policy, you mentioned Anthony Blinken travelling just there. There might be concern in parts of Europe about funding for Ukraine in the context of Israel and Hamas. Are you concerned in Germany that funding for Ukraine will be caught up in U.S. domestic politics?
No, I'm sure that U.S. will stick to the promises they have made, as Europe and Germany has done, and we have to stick to the promises. Otherwise, that was all only words. And of course, I'm concerned as the war in Ukraine is ongoing, and as we are talking here, also people are dying there, and the next winter is coming. So the situation is all but easy. But we gave them all support and promised all support, and we have to stick to that. And I'm sure that the U.S. government, the U.S. people, and the German and European people will do that.
That was my exclusive conversation with the German Vice-Chancellor and Economy Minister Robert Habeck. Coming up on the programme, we'll get back to some of the earnings stories making news this morning. Ryanair will pay out its first ever dividend as Europe's biggest discount airline benefits from growing traffic. More from our conversation with the CFO next. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
This is Markets Today, 42 minutes into your European trading session. Gains modest and fading across European equity markets. Let's go to one story that has been pushing its stock higher. An earnings update from Ryanair. Shares have risen at the open. That's as the company says. It will pay out a dividend of 400 million euros. Its first ever as Europe's biggest discount airline benefits from growing traffic. Bloomberg's Kriti Gupta spoke to the Ryanair CFO Neil Sorahan earlier.
We're now comfortable that we can also sustain an annual ordinary dividend. To put this in context, the first ordinary dividend of 400 million equates to what our shareholders invested in the height of COVID. So we're delighted this morning now to be able to effectively refund that. They put 400 million into Ryanair in September 2020. We then raised a bond on the back of that and come out of COVID with a very strong balance sheet. But going forward, the board have committed to 25% payout of prior year profit after tax starting from the next financial year. So 35 cents, which will be paid between February and September of next year. So I think it's a strong vote of confidence in the business that we have the balance sheet strength to be able to sustain large capex program, invest in growth for our shareholders, but also to return some funds to them as well.
Well, you mentioned a good chunk of that is coming from your bond issuance as well. Neil, I want to go there next because if you actually look at your debt distribution, you have about $2.8 billion in debt coming in due by about 2027. At the same time, you have this massive payout promise. A lot of people would look at your numbers and say, well, this is great right now, but what happens when you start to see the macroeconomic risk really weigh on European consumer demand? A lot of questions about how quickly recession is going to hit in Europe and by extension, how that's going to hit your bottom line. How are you going to service the $2.8 billion of debt you have coming due?
Yeah, well, we finished the half year with $3.6 billion in cash, and that was after paying down $1 billion in debt in August alone this year. We had a $750 million maturing bond, and we paid down $260 million of our revolving credit facility. We've effectively paid down half of our debt in the past 2 years. We've got a very manageable profile with the next bond maturity in 2025 and then the final bond maturing in 2026. So similar to what we've done over the past 2 years, we expect to be able to service the capex out of our own cash resources, but also the bonds as well, which puts us in a very unique position compared to our competitors who are raising funds in rising interest rate environments, paying significantly higher lease costs for their aircraft. We're actually paying down debt out of our own cash resources, which hugely widens the cost advantage that we have over everybody else. And then just touching on your demand question, demand is very strong. As you saw, we had 105 million passengers in the first half of this year. We're targeting 183.5 million on a full year basis. We've 90% of our summer 2024 schedules on sale already, and bookings are strong because capacity is very constrained in the market at this point in time and likely to remain constrained. We're only at about 94% of pre-COVID capacity, and I think capacity will remain low for some time to come.
That was the Ryanair CFO, Neil Sorahan, speaking to Bloomberg's Kriti Gupta a little earlier on today. Let's get back to the breaking news coming through on the Eurozone economy. Kriti was just talking there about areas of weakness, and we see a weakening picture for services over in Italy. So the services PMI number coming in at 47.7. That is against a prior number of 49.9. So it's weaker than the prior number. It's also weaker than the survey, which was 48.5. So weakness in the European story there. That leads to some underperformance of the composite number as well as a result. And kind of in contrast to what we saw from Spain, the Spanish number actually looked a little better than had been anticipated on services. So we'll continue to monitor this data as it breaks for various parts of Europe. Let us get to some of the other big stories that we're covering here at Bloomberg this morning. South Korean stocks have surged after the nation reimposed a full ban on short selling until June of next year. Regulators say the move is needed to stop the illegal use of a trading tactic regularly deployed by hedge funds and other investors around the world. There are warnings the ban could deter participation by foreign funds in the market and complicate Korea's bid to seek developed market status in the indexes run by MSCI. Canon says it plans to price its new chip-making gear at a fraction of the cost of market leader ASML's best lithography machines. The Tokyo-based company's new technology would open up a way for smaller semiconductor makers to produce advanced chips. This as Canon seeks to make inroads in the cutting-edge equipment now playing a central role in US-China tech rivalry. President Volodymyr Zelensky has urged US Congress to maintain US military assistance to Ukraine. He warned lawmakers blocking aid. They are risking an eventual Russian attack on a NATO country that would draw in American soldiers. Some Republican lawmakers are insisting on more US border security funding as the price of moving their view on Ukraine. Israel says its troops have entirely encircled Gaza City, effectively cutting off the northern part of the Strip from the south. Meanwhile, U.S. Secretary of State Anthony Blinken's diplomatic push continues. He's in Turkey today following an unscheduled stop in Baghdad and a meeting with Mahmoud Abbas in the West Bank. Joining us now is Bloomberg's Yusuf Kamel Al-Din, who can give us details from the region. Yusuf, give us the latest details that we have on the ground.
Well, and as you said, basically this was an intensification of some of the attacks on the Gaza Strip. We understand that Gaza City is now encircled, which effectively means that the Gaza Strip is divided into a northern part and into a southern part. According to the Gaza Health Ministry, some 9,500 people have so far died. Of course, that ministry being run by Hamas. But there is a growing frustration as well, not just to bring an end to the violence, but in terms of getting aid into the Gaza Strip. Now we've got the Jordanians stepping in, bypassing the Rafah border crossing, sending in their own air force. We understand, according to a tweet by the Jordanian king, that they airdropped some of the aid into the Gaza Strip. We have yet to see how the Israelis respond to that kind of unilateral action. Anna?
Okay, that's the latest on the ground. Meanwhile, Anthony Blinken is in the region, continuing his diplomatic tour. What's he achieved to date? Where's he been?
Well, that is the key question, because we have a very packed agenda, and he's done already a lot in terms of meeting people face to face, whether it was in Ramallah, whether it was in Tel Aviv, a surprise visit to Baghdad. Now he's jet-setting across to Ankara. But the statements have been short and haven't really revealed any breakthroughs, be it in terms of bringing on a pause or a ceasefire or allowing in more meaningful amounts of humanitarian aid. And now we have the Iraqi Prime Minister visiting the Iranian side in Tehran. They had a press conference about an hour ago. It's pretty much a gloomy situation at the moment. There are no immediate prospects that there's going to be any progress anytime soon. Anna?
Yusuf, thank you very much. Bloomberg's Yusuf Kamel Al-Din with an update on geopolitical politics. We're waiting for some data to break here from France, the latest services and composite PMI data. We've had data out from Spain and from Italy. It's been a mixed bag so far. The euro has gained 0.1% in the run-up to these French numbers. Let's get to the French number, and we see a bit of disappointment here. So just like we saw in Italy, the services number coming down. It's at 45.2, so that's firmly in contraction territory. That's lower than the prior reading, which incidentally was the same as the survey. So it's lower than the prior and the survey, and that means that the composite number has also disappointed. So some disappointing numbers coming through there. You see, perhaps the euro might soften a little on that. It is up 0.1%, as I say, against the US dollar. Still waiting for the German data. That's due in around 5 minutes' time. Coming up on the program, BOJ Governor Ueda signals there's a low chance of ending negative rates this year. We'll discuss what that means for the yen with Bloomberg MLive's Venram. He'll be with us shortly. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Markets Today. We are 53 minutes into our European trading session, which has shown European stocks losing their earlier momentum. Let's talk about what's driving these markets. Ven Ram joins us from our Markets Live team. And Ven, let's start with what's going on in Japan. We haven't given much time to this today. The yen, obviously, a lot of turmoil created by the BOJ and expectations around what they will and won't do in recent weeks. Where does that go next for you?
Well, the UED said two things of note today, Anna. One was that the possibility of meeting a sustainable 2% inflation target has risen, but not sufficiently so. And he also said that it's possible for the BOJ to form an informed opinion on the matter in the fiscal 2026 projections. Now, those projections are not due before April. So he effectively is saying that, look, don't get your hopes up that something dramatic is going to happen in December 2023. The reason he's kind of sending that message is in December 2022, they tweaked curve control, surprising the markets. So he's essentially saying, look, it's not going to happen this time around, and he's effectively disbanding the speculative jury on the yen.
Ven, that's interesting then on the Japanese side of things. We're waiting for some German data to break, the PMI numbers coming through for Germany on the services side. So far, the rest of Europe has given us pretty disappointing data, apart from Spain, where things looked a little better. Actually, the German number then coming in a little better than was anticipated, still in contraction territory, fractionally better than was expected. And so that filters through to the composite number as well, but still firmly in contraction. Put that together with the factory orders data, which showed some big revisions downward earlier. Where does that leave us for the European story then, Ven?
I think, as you said, the big picture is still that we are in contractionary territory. These marginal uptick in the final reading doesn't make much of a difference from the take-home message. The take-home message is that the European economy is kind of weakening. It's losing momentum pretty fast. And at the same time, the ECB is caught in between a rock and a hard place because inflation is not coming down as much as they would like it to. Core inflation is still hugging 4%. And we had the ECB president saying this weekend that, look, we don't expect a convergence to the inflation target before 2025. Put all of that together and what do you get? You get an economy that is weakening fast, and yet inflation is elevated. So that's not an easy trade for the markets, which is why you see that front-end German bonds are not rallying as much as you would have expected them to, given that the ECB is pretty much near the end of its tightening cycle.
Okay, Ven, thanks very much. Ven Ram from our Markets Live team. Remember, you can get up-to-date analysis and insight from Ven and the rest of the Markets Live team. NLIV Go is the function to use on your Bloomberg terminal. As we noticed earlier on this morning, we see the yields are going a little bit higher across European equity markets this morning. This in contrast to the overall theme of Friday, of course, which was for lower yields, certainly at the shorter end of the US Treasuries curve. In terms of stocks, then, we're losing momentum a little bit here. We're up by 0.1% on stocks, but we'll leave you with more analysis next hour. This is Bloomberg.
this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Season is here.
Tons going on, lots of earnings.
Beat wherever you look.
Bloomberg breaks the numbers first.
It's a tale of two earnings. Results from Goldman Sachs, Bank of America, and Morgan Stanley.
Netflix is out, guys.
With exclusive expert analysis.
Recovery is underway.
They crushed it. It was one of their best quarters ever.
This is a story all about pricing power.
We're going to make more money. We're going to make more money. And we're going to make more money. We're going to make a bank. And I think that is what we can take away.
Bloomberg Television and Radio. Context changes everything.
From New York City.
From London. In Sydney.
From Washington.
In Tokyo.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
This is Bloomberg.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Kriti Gupta in London, standing in for Francine Lacqua. Here's what's coming up on today's program. Telecom Italia shares erasing their gains over uncertainty about the company's blockbuster deal to sell its landline network to KKR. In the meantime, Ryanair shares gaining after the budget airline announces its first ever dividend, but the company is still cautious on higher fuel bills. More of our interview with the Ryanair CFO. Plus, in geopolitics, the U.S. Secretary of State Antony Blinken arriving in Turkey as part of its latest regional tour to try and prevent a spread of the Israel-Hamas war. A lot of cross currents here. Let's dive right into the market reaction. Take a quick check at the European markets map, because when you look across Europe, you'll see a little bit of green on the screen. Now, this is positive. A lot of that gain is going to be coming from two main factors. One is going to be the Telecom Italia story, and some of it is going to be the dovish pivot as well. But it's also going to be perhaps some of the data that we are getting right now. Euro area October services PMI coming in at about 47.8. The prelim was, get this, 47.8. So bang on expectations. You actually compare this to what you saw in just the last 5-10 minutes or so out of Germany and France. A quick review there. The October services data out of Germany was the PMI of 48.2, slightly stronger than the estimate of 48. Then for France, 45.2, coming in weaker than the prelim of 46.1. So again, a mixed picture in Europe. Surprise, surprise. But right now, overall, Euro area coming bang in line. Not much reaction out of the euro, but again, a lot of that is going to be a function of what you are seeing from the dollar, which again is a function of what you're seeing from the Fed pivot, or at least what the market's interpreted as a Fed pivot, which brings me to the big data point, I think, of the last week, which is really leading, I think, the market reaction on the macro front is going to be that U.S. jobs data. That's the chart I'm showing you right now on the air. 150 new jobs when it comes to non-farm payrolls. The estimate was somewhere between 180 to 200. What's important to keep in mind here is that this is one of the very few times that the jobs number has actually come in significantly below the estimate, and that is both positive in terms of introducing slack into the labor market, but a negative if you interpret it as simply that the resilience of the economy, the American economy, is cracking. That's an early sign. So what do the markets do? Well, I think the best way to look at that is through the Fed swaps pricing. Simply this idea here that you are seeing that a dovish pivot is what the markets are expecting, that in June 2024, you are going to get a full cut from the Federal Reserve. Now, we have seen this movie before. It has happened before, but I think the fact that Chairman Powell didn't double down on his hawkish rhetoric that he usually does in the meeting last Wednesday has really changed the pricing quite a bit. The NFP report has only added to that. And remember, 150,000 jobs was is really something that's supposed to be normal pre-COVID. Post-COVID, perhaps a return to normalcy and therefore a return to those recession calls. And that's just some of our top stories on the macro front that we're watching. Let's get to the micro here and talk about Telecom Italia. Shares slipping, erasing their earlier gains. We're higher by almost 5.5%. Now you're seeing the shares down 3.5%. This comes after the company approved the sale of its domestic landline network to U.S. private equity giant KKR for 22 billion euros. The deal is expected to close by next summer. Now joining us for more on this is Bloomberg's Rome Bureau Chief Chiara Albanese. Chiara, a pleasure to have you on the program. Thank you so much for joining us. Let's start with just how big of a deal this is. Where does the Italian government stand on it?
Look, this is a big deal, and the Italian government has been backing the progress on the sale, also because it will own a stake and the end of the whole process. But as we are seeing in the share reaction this morning, at the announcement that came late last night does not mean that the game is over here. The shareholders are threatening a legal battle, and that is very unclear on how that could be effective and which measures that could be used.
You went right where I wanted you to. The Vivendi opposition here, I mean, we know it's their biggest shareholder. We also know this vote wasn't even run by the shareholders at all. How big of a deal, how big of a fight could they put up? What does that actually look like?
So while at the end of the day, it doesn't seem like they've got enough votes to actually halt the sale, the noise and continuous threats that they could present to Telecom Italia and also to the government in order to stop the process could be very demotivating for the whole process, and also erode part of the financial gains that are part of this deal. We should always keep in mind that the value of the whole process is also dependent on how many synergies and earnouts can be squeezed out of the merger with Open Fiber, creating a single network. And it is very unclear how that could happen with the legal battle playing behind the whole scene.
Well, there's a lot of different pieces to this Telecom Italia network and grid, as you point out very specifically. I think there was a lot of hesitation about the cable network that you just brought up as well. What's actually next for the business itself? In 12 months' time, what does it look like?
Well, taking a network away from a telecom company is quite a hybrid, and it is very unclear how Telecom Italia could survive on its own feet without controlling the network directly. So we should expect more players involved in this big saga over the next months, potentially with mergers, acquisitions, and also companies looking at Italy from abroad.
It's a really interesting dynamic at a time that's expected to perhaps even flush the Italian government with a little bit more cash. We'll see how this actually plays out. Bloomberg's Chiara Albanese in Rome. We thank you so much for joining us this morning. It's just one of the stories that we are watching. The other brings us right back to the macro fronts. When we get to U.S. jobs report, which saw investors bring forward the bets that the Fed may be done raising their rates. Atlanta Fed President Raphael Bostic weighed in on what that might look like.
Today, my outlook is that we're going to stay on that slow and steady. And if we continue to do that, then I think where we are now will be sufficiently restrictive to get us to the 2% level for inflation. But there's still a lot that's going to happen between now and even the next meeting.
Joining us now for more on the Fed and the broader market story, Freya Beamish, Chief Economist and Head of Macro Research over at TS Lombard. Freya, a pleasure to see you again. Look, the theme, I think, of what Chairman Powell, what Raphael Bostic, and even what has resulted in a deal in Italy is that there are deficits and there are budget concerns around the world. That seems to be the one thing we can all agree on. When it comes to the Federal Reserve, though, the tide has changed very, very quickly, from very hawkish to what the markets are interpreting as a very quick dovish pivot. Is the market getting ahead of itself?
I think we are still in that stage of the game where we're in the immaculate disinflation part of the story. I think moving towards 2024, disinflation might start to become a little bit more maculate in the sense of a little bit more painful. As in, it might require, for disinflation to continue in 2024, it might require the economy really to be running below trend. And the main consideration here, I think, there's a lot of uncertainty, but the main consideration, I think, is the extent to which the U.S. is still in what I would term as monetary disequilibria, as in, it's a fancy way of saying that there's too much money still compared with what people can buy in the real economy. In the rest of the world, I think we're pretty much back to what I would think of as an equilibrium kind of rate of turnover of money in the economy, and that means we're much closer to that kind of immaculate disinflation where inflation is coming down because the economy is weak. In the U.S., we're still just at that kind of tail end of COVID distortions coming out of inflation, and the economy remaining still reasonably resilient because of that kind of excess of money that's in the economy still in the U.S. case. But I think we're kind of working through that reasonably quickly now, and we should hit that kind of critical point around the kind of the middle of next year. And looking to the jobs data, I think what happens between now and then is that you just get this continual grind slower, resilience, but grind slower that comes through in the jobs data. When that September number came out, we were saying, no, it's done. It's printed above its downtrend 5 times over the course of the downtrend that started in 2021. So the likelihood is that it prints below the downtrend again, and that is what came through in the October data. So we continue to see that kind of grind slower in the economy, in the jobs data as well.
I mean, at the core of what you're saying, though, is that with all this kind of excess money in the system, what you're seeing is basically asset price inflation in the financial markets. And I kind of want to zoom in on the bond market story very specifically, because one of the things that Chairman Powell and some of his colleagues around the country had said, and I think you've heard this from both the BOE and the BOJ, I imagine Christine Lagarde would agree, is that the bond sell-off, I should say, on the long end of the curve that we saw before the Israel and Hamas conflict actually broke out, had a pretty substantial impact on how hawkish the Federal Reserve might actually be. The fact that the markets might be doing some of the work for it. But Freya, let me ask you, if it goes in the opposite direction, if you see this bid for bonds sustainably stick, can the market do the job of a rate cut for the Federal Reserve?
But I love that question. It's so kind of chicken and egg a little bit when you get to this stage in the cycle. But I think, cut a long story short, I think we will see that kind of slowdown. I'm not really looking for a kind of a typical recessionary dynamic in the U.S. case. It's more of a kind of an economic reset. So yes, the fact that real yields have risen so far over the course of this year is part of why we're seeing why we're forecasting a continued slowdown. And I think that is not yet in the real economy data, and that's what we'll start to see coming through into next year. If yields are coming down now, to me, that's a sign that the economy is starting to roll over. There's a lot. It's complicated because we have to bring the liquidity side of it in as well. I think part of the reason why yields are softening a little bit is because that kind of TGA, the Treasury General Account rebuild that happened after the debt ceiling was raised, that's slowing down a little bit now as well. So the liquidity situation is getting a little bit easier, not easy, but easier. And at the same time, I think the economy will be slowing. You can look at it from that kind of monetary disequilibrium way that I thought about it or talked about it, but you can also look at it just in the sense of how long it would take for that monetary tightening to feed through, including the impact of the real yields that you've just talked about. And looking to next year, there is a maturity wall in corporate debt. There is the likelihood that people will already seem to be saying, okay, well, I can't just remortgage now and then remortgage next year when rates will be lower. Therefore, I better put off my remortgage, and that's impacting on the housing market. So we had this kind of bounce in housing after the initial shock of the rise in rates, and now that seems to be rolling over as well if you look at the survey data. So it's just this slow kind of grind towards what I would call an economic reset, but not an outright recession. And that's important because the private sector looks a lot cleaner than it has in previous kind of pre-recessionary stages, and that's where your secular bear bond market comes into the story.
Well, you're talking about this slow, almost painful grind, so let me lean into that and talk about the 60,000-foot view, because you just mentioned the Treasury account specifically. Are you at all concerned about this higher for longer narrative, not from the Federal Reserve, but more as a function of global demand for treasuries kind of being eliminated? China, Japan, even Saudi Arabia, all cutting their exposure to the treasury market at a time when we're talking about a fiscal deficit in the United States. What does the Federal Reserve do when liquidity isn't on their side?
Yeah, so coming towards the kind of the secular term, that is one of the major drivers that we've been forecasting, that China is going to be in a situation where they're kind of pushing against the depreciation of the currency. They've sort of passed their Minsky moment. There's a secular drift towards a real effective depreciation of the renminbi, and that pulls China out of the U.S. Treasuries market. The same for Japan, which has been another big inflow and another big kind of anchor to real yields over the secular term. The Bank of Japan very eager to move away from the distortionary aspects of the long-term accommodation in which it's engaged, and also even kind of signs of secular increase timidly in inflation even in the Japanese case, as part of that global kind of shift as we are forecasting towards higher inflation on the secular term. So you've got a lot there in terms of the flows. You've also got a lot in terms of the likelihood of higher real yields, and in terms of higher inflation in developed markets themselves, as we retreat from hyperglobalization, as we move on from deleveraging, as there's greater likelihood of cost push shocks coming through from destabilized geopolitical world and the climate shocks as well. So there's a lot that's all pushing in the same direction with regards to the secular drift in yields. And if there is an economic reset, this might be like your last chance to get a tactical long in bonds before the kind of the second leg of that secular bond bear market comes through.
Some economic analysis, some bond analysis. What can Freya Beamish not do? Chief Economist and Head of Macro Research at TS Lombard, we thank you so much for your insights this morning. Coming up on the program, U.S. Secretary of State Antony Blinken arriving in Turkey in his diplomatic push to contain the Israel-Hamas war. We get more on the latest on the ground coming up next. This is Bloomberg.
When you look at tourism, it's booming, but it also means some of the islands are overcrowded. Exactly. Is there something that you can do about that?
Thank you for asking this question, because I want to make sure that, in 5 years from now, we will not have sacrificed, the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focusing on sustainable growth. That's why I will always push for quality over quantity. Very strict in terms of standards. We are actually looking at our local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to protect, especially islands, which are more sensitive.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
conversations that matter and the insights you need. This is The Pulse. I'm Kriti Gupta in London. Now, the U.S. Secretary of State Antony Blinken's diplomatic push continues to try and contain the Israel-Hamas war. He has now landed in Turkey after making an unscheduled stop in Baghdad, as well as meeting Mahmoud Abbas in the West Bank. Let's get more from Bloomberg's Onur Ant in Istanbul. Onur, pleasure to have you on the program. Bring us the latest on the ground.
Israeli military struck over 450 Hamas targets over the past 24 hours, while its ground forces encircled Gaza City from the north and south. From now on, we expect more close-quarter urban warfare in Gaza Strip between Hamas and Israeli Defense Forces. This is the north of the Gaza Strip, the besieged territory where more than 2 million people currently live. In the south, there's another important development, the Rafah border crossing between Gaza Strip and Egypt, which saw flow of some foreign nationals or people with dual nationalities, as well as wounded Palestinians into Egypt since the 1st of November, have seen a blockage of activities since Saturday, when Hamas accused Israeli Defense Forces of violating the terms of an arrangement that allowed people to cross from Gaza into Egypt since last week. And as far as we know, this is the third day that there has been no crossings through Rafah. It's important because this arrangement was arguably the only diplomatic achievement, so to speak, since the fighting began early in November.
Yeah, big question about how much these diplomatic efforts are actually working. Bloomberg's Onur Ant in Istanbul, we thank you so much for your reporting this morning. Much more to come after the break. Stick with us. This is Bloomberg.
This story did come around as something that's a bit different. There is a dark side to it.
It's hard to even talk to people about these chemicals and tell them, look, there's a chemical that's in you that's not found anywhere in nature.
We've all been used as guinea pigs for the last 70 to 80 years. We weren't told we were being exposed, but they did it anyway.
This right here is the shadow fleet. To actually see clandestine behavior was really surprising. That makes you think, well, what else is going on?
A lot of people let Agnes down. What she was told is exactly what happened to her.
It took the lid off a much bigger problem. I think that's probably the most shocking part of this whole thing.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Or other authorities.
Could face bigger challenges next.
It was going to keep Rain World Cup. This is a 3.
As the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
comfortable that we can also sustain an annual ordinary dividend. To put this in context, the first ordinary dividend of 400 million equates to what our shareholders invested in the height of COVID. So we're delighted this morning now to be able to effectively refund that. They put 400 million into Ryanair in September 2020. We then raised a bond on the back of that and came out of COVID with a very strong balance sheet. But going forward, the board have committed to 25% payout of prior year profit after tax starting from the next financial year. So 35 cents, which will be paid between February and September of next year. So I think it's a strong vote of confidence in the business that we have the balance sheet strength to be able to sustain large capex program, invest in growth for our shareholders, but also to return some funds to them as well.
Well, you mentioned a good chunk of that is coming from your bond issuance as well. Neil, I want to go there next because if you actually look at your debt distribution, you have about $2.8 billion in debt coming in due by about 2027. At the same time, you have this massive payout promise. A lot of people would look at your numbers and say, well, this is great right now, but what happens when you start to see the macroeconomic risk really weigh on European consumer demand? A lot of questions about how quickly recession is going to hit in Europe and by extension, how that's going to hit your bottom line. How are you going to service the $2.8 billion of debt you have coming due?
Yeah, well, we finished the half year with $3.6 billion in cash, and that was after paying down $1 billion in debt in August alone this year with a $750 million maturing bond, and we paid down $260 million of our revolving credit facility. We've effectively paid down half of our debt in the past 2 years. We've got a very manageable profile with the next bond maturity in 2025 and then the final bond maturing in 2026. So similar to what we've done over the past 2 years, we expect to be able to service the capex out of our own cash resources, but also the bonds as well, which puts us in a very unique position compared to our competitors who are raising funds in rising interest rate environments, paying significantly higher lease costs for their aircraft. We're actually paying down debt out of our own cash resources, which hugely widens the cost advantage that we have over everybody else. And then just touching on your demand question, demand is very strong. As you saw, we had 105 million passengers in the first half of this year. We're targeting 183.5 million on a full year basis. We've 90% of our summer 2024 schedules on sale already, and bookings are strong because capacity is very constrained in the market at this point in time and likely to remain constrained. We're only at about 94% of pre-COVID capacity, and I think capacity will remain low for some time to come.
The Ryanair CFO, Neil Sorahan, there speaking about their first ever issuance of a dividend, how they're going to service that $2.8 billion of debt. Something that the markets are actually loving. Shares higher by about 6.2% off of that unprecedented announcement. Coming up on the show, Warren Buffett and a record pile of cash. We're going to dive into it. Stick with us. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything. It's DC FinTech Week, and Bloomberg is on site. Live from Washington, Kaylee Lines speaks with Grayscale CEO Michael Sonnenschein and others. Tune in for a special one-hour episode of Bloomberg Crypto. Bloomberg. Context changes everything.
Telecom Italia shares are racing their gains over uncertainty about the company's blockbuster deal to sell its landline network to KKR. Meanwhile, Ryanair shares gaining after the budget airline announces its first ever dividend. The company cautious on higher fuel bills. More in our interview with the Ryanair CFO. Plus, in the Middle East, the U.S. Secretary of State Antony Blinken arrives in Turkey as part of his latest regional tour to try and prevent a spread of the Israel-Hamas war. Good morning and welcome to The Pulse. I'm Kriti Gupta in London. One of our top stories here, Warren Buffett's Berkshire Hathaway has reported for the third quarter the company feeling the effects of a deals drought with cash pile hitting a fresh record. Let's discuss the results. Bloomberg's Charlie Wells joins me right here on set. Charlie, let's talk a little bit about these operating margins because everyone else seems to be shrinking and somehow Warren Buffett coming out a pretty big win.
I mean, the story here really is about insurance. So, Berkshire Hathaway is such a huge holding company in the U.S. They hold companies ranging from insurers to railways to Dairy Queen, the fast food retailer. But basically what we saw is these huge holdings that they have in insurance, at least in this past quarter, performed very well relative to the same period last year. So 2022, really tough for the insurance market. There were a lot of sort of outsized events that really hit the bottom line. But this quarter, the insurance unit at Berkshire Hathaway posted $2.42 billion in operating earnings, which was a huge boost.
Well, with higher margins comes more cash. And ordinarily, we all love to have a little extra cash in our pockets. You can see in the chart right there, we're talking about a record amount of cash for Berkshire Hathaway. But in an inflationary environment, that costs you. Cash is worth less in an inflationary environment. Do you think they're going to feel some pressure to deploy it?
I mean, that's the concern. So investors so far have really been liking Berkshire Hathaway's stock. So it hit a record in September. It's up 14% year to date. Berkshire Hathaway actually spent $1.1 billion in the third quarter buying back some of those shares. So that's going to make people happy, at least in the short term. But as you say, cash earns less in an inflationary environment. And Berkshire Hathaway is known for making these value investments. And at some point, investors could start asking, what are you going to do with that money? Where is the value in this environment right now?
And what we love about Berkshire Hathaway, specifically Warren Buffett, besides the fact that he lives on a farm in Omaha, is that he is his investment playbook is the kind of picture of the American economy. We're talking about railroads. You talked about Dairy Queen. What's more American than that? But as well as oil companies, Coca-Cola, even Apple. What do his investments and Berkshire Hathaway's investments, by extension, say about the American economy?
It's a really good proxy, and it's interesting, I think, thinking about high interest rates, because what Berkshire's results really seem to tell us was that, higher interest rates are actually impacting some segments of this holding company. So when you look at home builders that are negatively affected by higher mortgage rates, that's one area of stress that we saw. But look, this higher rate environment for Berkshire, as well as for the U.S. economy, is causing some stress, but it's not really kind of blowing the whole thing away as a lot of people feared. And even back in May, Buffett warned at the AGM that there could be some hits to revenue this year, and that hasn't actually panned out quite as negatively as he may have thought back then.
Yeah, we'll see if he does actually end up deploying some of that cash that he's raking in from the insurance business, apparently, to perhaps not the benefit of the people who are being insured. Bloomberg's Charlie Wells, we thank you so much for that. Now, before we move on to some more earnings, I want to bring you some economic data. The UK October construction PMI rising to about 45.6. That is relative to 45. You get a quick check on the pound here, the cable rate. That is where you're going to see, well, a little bit of movement. 1.24 is where we're at on the cable rate. And look, what's important to keep in mind here is that a lot of that acceleration that you saw before the data actually hit came from dollar weakness. You're seeing a similar move in the euro as well. Again, a function of the macro story, but that latest leg lower or pairing of that gain is actually coming from the data. Again, 45.6, the estimate, or I should say the prior reading was about 45. So a slight acceleration, but again, not enough, I think, to create sustainable strength in the FX market. So that is your economic data. Quick check there. Let's get to move on to the earnings story in Europe. Plenty of companies have been earning. We're going from telecoms to energy to some even the consumer sectors, even talking a lot about the banks. UBS, Commerce Bank, ABN AMRO, all reporting this week, and that's what we have our eye on next. Let's bring in Bloomberg's Maggie Schiltag. Maggie, let's start with UBS specifically. A lot going on, a lot of spotlight on them after the Credit Suisse transaction. What are we paying attention to?
Yeah, so obviously a highly anticipated set of results from them tomorrow, given it's going to be the first full quarter, including Credit Suisse. Now, UBS will be very eager to start showcasing some of the benefits it's seeing from that takeover, and I think investors will really be looking to get a bit more of a gauge as to where that future value is really going to come from the takeover, as well as honing in a bit more on that key talent acquisition across the company. Attention will also continue to be on the bank's wealth flow and deposits, as well as its pipeline going forward. It's very much more skewed towards equities trading than many of its peers, particularly in the US, and that potentially bodes well for the bank tomorrow, as we've seen very strong sets of results, particularly from US banks, Morgan Stanley and Goldman Sachs, who all beat on that front. So that really bodes well for UBS tomorrow.
What's really interesting about UBS is that they kind of, to your point, have that fixture in equity trading as well. Some of the other European banks still trying to kind of make their way. Talk to us about what we can expect from some of these other European banks at a time when we're expecting interest rates to peak.
Yeah, exactly. So far this season, we've really seen a clear outperformance from the US, given that their economy is continuing to grow pretty strongly. And I think going forward, we could continue to see a bit more of that transatlantic divergence as we continue to see a bit of a slowdown in Europe, which could impact banking products going forward. So it'll be interesting to see what kind of effect that will have on demand. And as you said, as we continue to hear more and more about interest rates potentially having neared their peak or peaking, it will be interesting to see how banks deal with that going forward, given that they might be forced to find some new avenues for growth as we go on.
And that's going to be crucial from the banking sector, but then we're also getting results on the telecom side as well. No shortage of earnings this week. Telefonica, Deutsche Telekom. What's on your radar there?
Exactly. So the focus for both of those reports will be shareholder returns as well as cash flow going forward. Now, Deutsche Telekom set the scene very nicely for themselves last week when they announced that they plan to increase their dividend for the year by 10%, as well as buying back 2 billion euros worth of shares. Now, analysts after that were saying that could just be the start for them, so it'll be interesting to see how much further they can take that. Now, Telefonica, recently described as Spain's most strategic company, its results are going to coincide with a capital markets day. So the focus for that update will really be looking more into their midterm strategy as well as their outlook for their ongoing cash flow. Now, given all the news recently, particularly yesterday's from Italy, all eyes now for Telefonica on the Spanish government's next move after last week. Yeah. They said that they are thinking about taking a stake in the company to warn off any foreign competition. So it'd be interesting, given what else has been happening, to see where they take that.
Yeah, it feels like Italy almost setting the precedent for the rest of the continent. Certainly something we're going to be watching very, very closely. Bloomberg's Maggie Schiltag, we thank you so much for your analysis this morning. And of course, she was talking about the bank story. We're going to bring you our interview with the UBS CEO, Sergio Ermotti, tomorrow at 7 a.m. London time, right here on Bloomberg. We're also getting some headlines by by the way, from another major company that everyone, I think, knows, is Tesla, rising by a pretty substantial margin, almost 3% on the day. This is coming after a Reuters report that they're going to build 25,000 euro cars at their German plant. This is pretty significant when it comes to the actual pricing here, because about 25,000 euros is substantially lower than what a Tesla car actually goes for. The fact that they're increasing that at their German plant is also pretty telling. But again, affordability is going to be a key issue in terms of appealing to the European consumer, where, of course, fewer here have appetite to even buy cars. So nevertheless, Tesla shares higher by 2.6% on that report. And coming up, I guess we're going to stick with Elon Musk here, renewing his calls for regulating artificial intelligence. We take a closer look at the challenges in the tech landscape. Tom Smith from Gerardian Partners, also the former legal director of the CMA, is going to break it down for us next. Stick with us. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
The conversations that matter and the insights you need. This is The Pulse. I'm Kriti Gupta in London. Now, Elon Musk has revealed his own artificial intelligence bot to challenge ChatGPT. The billionaire says the Grok platform will pull real-time information from messages posted to X and has a, quote, rebellious streak and loves sarcasm. Now, a limited group of U.S. users are testing the prototype, which has been in development for 2 months. In addition, last week, Musk renewed calls for AI regulation in a televised chat with UK Prime Minister Rishi Sunak at the two-day AI Safety Summit. A lot coming out from Elon Musk here, but I think the broader topic we need to know is, with all this new technology, how do you regulate it, especially right here in the UK? For that, I want to bring in Tom Smith from Gerardian Partners, who also has formerly served as legal director at the UK's Competition and Markets Authority. He has had his hands full for the past, I want to say, decade or so. It's been a lot. Tom, let's dive in here, because we started talking about Elon Musk and his many ventures, but I want to broaden that out to big tech largely. We're just coming off, in the last couple of weeks, really, of approval that the CMA had very notably pushed back against Microsoft's really historic acquisition of Activision, $69 billion on the table. It doesn't really sound like they're planning on stopping there. In your expertise, how big is the CMA going on big tech?
Yeah, it's a very different environment to what it was 10, 15 years ago. I think the CMA and, in fact, lots of competition authorities all around the world think they've been too laissez-faire. They've allowed too many deals to happen. They point at old deals like Google DoubleClick or Facebook Instagram as deals they should have blocked. So they're definitely blocking more deals than they used to. Microsoft Activision obviously got through in the end with more concessions in the UK than there were in the EU. But it's not that simple a picture that the CMAs being the aggressive ones, because recently the European Commission blocked a deal from Booking.com, the e-Travelly, which is a relatively small deal that the CMA had cleared, but then Brussels intervened in.
Yeah.
So it's a complicated picture.
Well, talk to us then about some of the specific American companies here. Recently, we know Meta and Amazon as well had to make some concessions with the CMA. Can you walk us through what those actually looked like and whether or not you think it really makes that much of a difference?
Yeah, I mean, there's a lot going on in competition law. So just on Friday, 2 big cases were settled by the CMA. Meta agreed some limitations on how it would use its advertisers' data, and Amazon also agreed some commitments to the CMA about how it would run its marketplace. It's all against the backdrop of the Digital Markets Competition and Consumers Bill that's going through Parliament that will give the CMA really extremely wide powers to regulate the big tech firms once it's designated them as having strategic market status under the Act.
Do you see that as eating into a lot of the way they currently operate right now? I feel like from an outsider's point of view, when you hear regulatory action, nobody exactly embraces that, right? But when you look at it from a big tech point of view, the way that Meta, Amazon, et cetera, operate in Europe relative to the rest of the world is still significantly small. Do you see this bill as having a material effect into how it operates, not just in Europe, but around the world?
Yeah, I think it will, but it's not just the UK. Most of the developed economies are doing the same thing. Australia's got a similar proposal. The EU Digital Markets Act is already on the books. And then there are the big legal cases in the US by the FTC against Amazon and the DOJ against Google. Then you have the South Korean App Stores legislation that's already on the books. So it's really everywhere. So I think if the UK was doing it on its own, you'd think, well, are they really going to be able to move the needle worldwide? But they're all moving forward together.
Well, you mentioned South Korea specifically because we also know that they came down on some of the cloud services as well that some of the big tech had offered. Now we know that Ofcom has officially passed on the investigation here in the UK to the CMA as well. Now, we have some time before we get any sort of real result on that investigation, but what is the CMA worried about when it comes to cloud, which I feel like it's been in the marketplace for, again, at least a decade?
Yeah, so the things they're looking at is so Amazon with AWS and Microsoft with Azure are the 2 biggest players by a long way. Google is very much smaller, like 5 to 10% market share kind of thing in the UK. And the CMA is going to be looking at whether customers are locked in, whether they are actually able to switch their custom elsewhere if they wanted to, whether they can multi-home. So they're going to be looking at pretty kind of middle-of-the-road kind of competition remedies, helping customers to switch, making sure they're not locked in, making sure the discount structure doesn't make customers unwilling and unable to multi-home, things like that.
How much has the CMA's now success with Microsoft emboldened them to take on some of these other companies? By comparison, if you look at what's going on in the United States, the FTC's Lina Khan has attempted that and has tried multiple times and failed multiple times. To what extent is the CMA setting global precedent here?
Well, it is a little bit. I think you could argue whether the CMA will be emboldened or, in fact, made more timid after Microsoft Activision with all the fallout from there. Talking about Lina Khan in the US, the big thing there is the FTC's lawsuit against Amazon, which really is going at the heart of Amazon's business model. That's in fact probably a bigger deal than any single merger.
At its core, though, I mean, this is, I think, in the bylines, I imagine, of the CMA. It's helping customers, and they're currently looking at this deal from Vodafone and 3. A concern that any kind of lack of competition, as is put in the title, is going to end up in very high consumer prices. We know that the UK has, in the past, blocked other mergers from 3 as well. What do we think about this deal? Do you think it'll go through?
Yeah, the climate change, so 4 to 3 telco mergers have always been a big thing all over Europe and in the UK, and as you rightly said, the 3 and O2 merger was blocked in 2016. So the climate's changed a little bit in that the telco companies have a much better argument about the need to invest in 5G, 6G, and then on.
Yeah.
So they're trying to, that's their case, they're trying to show that they actually need to merge in order to get the scale to invest.
Yeah.
But, I mean, the CMA will be relatively sceptical about that. The CMA will be worried, exactly as you say, about consumer price rises. You've got the trade union opposing the deal, saying that it'll add £300 to consumers' bills.
Yeah.
So they'll be running the really very detailed econometric analysis, statistical analysis to see whether the parties do indeed have a post-merger incentive to raise prices. And so it'll all be down in the details for the next year.
What might a remedy on that front actually look like? How do you, in the face of a real lack of capacity that, as you point out, for the telecoms, how do you actually prevent prices from rising?
So there are parliamentary committee hearings last week or the week before where the companies are promising not to raise prices, but that's not really going to cut it. You need to prove that they don't have the incentive to raise prices post-merger, because if they have the incentive, then they'll probably do it, whatever they said to a parliamentary committee.
Yeah.
So it's going to be a big fight for the next year.
A lot to digest, a lot on the CMA's docket. Geraldine Partners, Tom Smith, we thank you so much for breaking it all down for us. Coming up, we unpick the struggles of Europe's biggest economy. It's at a political crossroads. Stick with us. We're going to dive into it next. This is Bloomberg.
When you look at tourism, it's booming, but it also means some of the islands are overcrowded.
Exactly.
Is there something that you can do about that?
Thank you for asking this question, because I want to make sure that, in 5 years from now, we will not have sacrificed, the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focusing on sustainable growth. That's why I will always push for quality over quantity. Very strict in terms of standards. We are actually looking at our local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to protect, especially islands, which are more sensitive.
Daybreak Europe, I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg. Top experts. Great questions.
We needed a little bit more coal. We let the coal power plants a little bit more longer in the system, but now the security issue is more or less solved. We were able to build up LNG terminals with incredible speed. We have now 3 operational and 3 more coming over the winter, and then we would have enough gas to go back to plan A. And therefore,
so you can phase out coal by 2030.
Yes, absolutely.
German Vice Chancellor and Economy Minister Robert Habeck there, speaking exclusively to Bloomberg's Anna Edwards. I want to stick with the conversation around Europe's biggest economy and dive into today's Bloomberg's Big Take. It is on the rise of Germany's far-right AfD party, targeting frustrated voters amid a persistent economic slump and a surge in immigration. Joining me now to unpack all of this is the authors of today's Big Take story. Chris Ryder joins me from Berlin. Chris, good morning. Walk us through what the German political landscape looks like right now.
Yeah, well, it's extremely fragmented. I mean, as you mentioned, the rise of the AfD is one part of the equation. The other part is the decline in mainstream parties like Olaf Scholz's Social Democrats. And that fragmentation comes out of the series of crises that Germany is facing. You mentioned the energy crisis is one. Habeck talked about that as well. And efforts to stem sort of that crisis is also reached kind of over, like for some voters it's seen as overreached. There's a heating reform this spring that was incredibly controversial. And in general, there's massive changes going on. There's the economic malaise happening. It just comes on the heels of COVID. So German voters feel very stressed and and there's more and more people feeling left behind. And that's making it more difficult for the mainstream parties to come up with a response.
Where does Olaf Scholz fit into all of this? I mean, his economic, his fiscal policies, are they good enough here when it comes to holding off this AfD offensive?
The difficult thing, I mean, Scholz, for many voters, he has very low approval ratings. He's seen as kind of disconnected from the average German, from the problems that people face. He's not necessarily super present in the public eye, and he's ruling over a coalition that's very. It's racked by infighting and bickering. I mean, he has three parties, which is in his coalition. There's the Social Democrats, the Greens, and the FDP. And they don't really see eye to eye on a lot of issues. And so a lot of these fights are coming out in the public, and that further undermines Scholz and the government's ability to operate and get things done. And that's a problem given where Germany is right now.
Is this something that might spread to the broader continent when you talk about what kind of precedent Germany might set in terms of this trend?
Yeah, well, as Germany the risk is that as Germany's political fragmentation and it becomes less and less predictable in how it's going to act, and then that you have populism spreading anyways, across the continent. But Germany, because of its position, obviously its role as the economic powerhouse and it's supposed to roll as a political leader, if it can't maintain that role, it risks undermining the EU itself. And the AfD's policies are definitely directed towards weakening the EU, weakening Brussels. And that's a risk, for the region. It's a risk for stability, like what happens with Ukraine. There's all these crises that Germany really needs to be playing a role on. And that as the political environment fragments, it gets more and more difficult for Germany to take a role here. And that has ripple effects, much farther.
Bloomberg's Chris Ryder joining us from Berlin. We thank you so much for breaking it all down. Of course, you can read the Bloomberg Big Take, which he helped write on Bloomberg.com, or simply search NI Big Take on your Bloomberg terminal. Very, very quickly, I want to talk about some of the movers that we are seeing. Of course, the two major corporate stories right here in Europe are Telecom Italia and Ryanair. Two different stories. Telecom Italia paring back. It's almost 5% gain, now down 3.5% as its deal with KKR under scrutiny, and as well Ryanair higher by 6% after its first ever dividend of about 400 million euros, something that Ryanair investors really seem to be loving. More ahead. Stick with us. This is Bloomberg.
baby boomer generation, and this generation is now increasingly dealing with problems relating to Alzheimer's, dementia, and so forth. Not particularly my age, but maybe some people my age, even younger, but obviously in their late 70s, 80s, and 90s, more and more we're reading about Alzheimer's. Is this an epidemic that you can't really do anything about, or is it something we can deal with in some way?
It's a real challenge for a lot of families, mine included. You know, I have a 90-year-old grandmother at home who's struggling with dementia, and providing care for her has been a real challenge. And for my family, we love her dearly. We want to be there for her, but where it's painful for us to see the toll dementia has taken on her. This is rightfully, a concern for families across the country. We're investing a lot in studying dementia, to not just Alzheimer's, but other forms of dementia, to understand what's driving it. But very interestingly, there's also some research that's taking place, lifestyle research, if you will, on the impact of diet, of social connection, of physical activity, and sleep on dementia as well. Dean Ornish, professor at the University of California, San Francisco, has been actually one of the key folks, who has been leading some of that research on the impact of lifestyle and dementia. This is a promising area.
Season is here.
Tons going on, lots of earnings. Beat wherever you look.
Bloomberg breaks the numbers first.
It's a tale of two earnings. Results from Goldman Sachs, Bank of America, and Morgan Stanley.
Netflix is out, guys.
With exclusive expert analysis.
Recovery is underway.
They crushed it. It was one of their best quarters ever.
This is a story all about pricing power.
We're going to make more money. We're going to make more money. And we're going to make more money.
We're making bank. And I think that is what we can take away.
Bloomberg Television and Radio. Context changes everything.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
U.S. Secretary of State Antony Blinken arrives in Turkey as part of his latest regional tour to try and prevent a spread of the Israel-Hamas war. Berkshire Hathaway is sitting on a record cash pile boosted by higher interest rates and a lack of takeover candidates enticing enough for Warren Buffett. Investors ramp up the bets on interest rate cuts in the U.S. and Europe. We hear from Jerome Powell, Christine Lagarde, and Andrew Bailey pushing back against the narrative. Very good morning to you. One thing is for sure, the equity markets are not paying major attention to the data, the services data, the softest in 5 months, the jobs report weaker than expected, the unemployment rate rising. That is all a momentum that the equity market does not want to listen to. S&P 500 up nearly 6% last week, building on that. The NASDAQ was up 6.5% last week. You're looking at the best runs in these markets since June. It is about the yield collapse, down 40 basis points since Tuesday. So that narrative bolstered this sense of euphoria in stocks. The yield slide also took the VIX down, the biggest plunge, the biggest weekly plunge in 21 months. So that repressed volatility, is that something you buy at that level? Do these stock markets need to start listening to the knocks on the door from the data? By the way, it could be that fear is just as costly as greed. That's according to Bank of America. Mike Wilson, however, he warns that these gains that you've seen in these markets are nothing more than a bear market rally. Let's hope not. I'm starting a 401k. A whole new world for me in America. Now, when it comes to stocks in Europe, it's the Stoxx 600 dips ever so slightly. Let's see what Lagarde fights back this week, Danny, in terms of rate cuts narrative. But Ryanair takes the crown. The first ever regular dividend from Ryanair. They're cautious on deliveries, but 400 million euros, that's a payout to the shareholders in Ryanair. Danny, good morning.
Good morning, Manus. This is so exciting. We can compare 401ks. What a fun activity for you and I to do. All right, you mentioned the drop in 10-year yields. We are giving some of it back today. There is some selling in the Asia session into the European session, higher by about 1.5 basis points. But still, the message in bonds stands clear. We move from 5.5% to 4.5% in less than 2 weeks. Again, it is that movement after some of the data we had and maybe a more dovish Powell than expected. Bloomberg dollar spot, that continues to weaken. It dropped on Friday, its biggest amount since July, so that also matched what we saw in yields more or less. Crude, that's up nearly 2%. We did have some of the war risk premium get priced out, though gains are being priced back in after Saudi and Russia over the weekend reaffirmed their desire for supply cuts. So, Manus, we have a maybe kind of sanguine market, maybe following on from the trends of last week, but can that stick? Our producer made this great and perhaps terrifying calendar for what's ahead for the week. We have central bank speak from Bailey, from Powell, and Christine Lagarde. Powell and Christine Lagarde are going to be speaking 2 times next week, Manus. Are they going to try to bat down the narrative that the market is currently carrying that we're going to get 100 basis points of cuts in 2024?
Well, of course, the issue is the dirty work done by the bond market, as you say, Danny, has been done. I would put it to you, and we looked at it a few times last week, we've got not just easy FCOM, but the risk is that financial conditions become a little bit light, and that is exactly what all of them do not want. They need to grasp that nettle and push back against the rate cut narrative. Some breaking news, Danny. I think you've got it on Yellen.
Yeah, we'll take those lines to Coco in a moment. But first, yes, some lines on Yellen. U.S. Treasury Secretary Janet Yellen and her Chinese counterpart, Manus, are going to be holding 2 days of talks in San Francisco this week. That'll be from November 9th to 10th, is a step towards more normalized ties. And, Manus, a long-awaited meeting between the leaders of the world's 2 largest economies.
Yep, of course, that quiet geopolitical, I suppose, building while you have the war between Israel and Hamas, you have the Ukraine funding, a whole host of other issues to deal with. Let's reset to the markets. Coco Agablo is Global Head of Economics over at SocGen. Coco, always great to get you with us. We started the show talking about this, I suppose, demonstrable drop in yields last week. The bond market has pretty much undone some of the dirty work that the central bankers were banking on. Do you trust a drop of 40 basis points in the 10-year government bond yield in the United States, that virulent repricing that happened last week from 5% a couple of weeks ago to 4.5%? Are we done with the test of 5%? Good morning.
Good morning to you, Manus. I think it's quite interesting because the rhetoric of a lot of investors and economists and strategists has been that we are due for a recession because we have raised interest rates, central bank have raised interest rates quite significantly, and this ultimately needs to slow down the economy. And our house view is for a recession to occur in the second half of next year. Bearing in mind that the market was hoping for, expecting a recession end of this year, then it was Q1 next year, etc. Then we had a series of very strong data, and that triggered, in addition to a lot of supply-demand dynamics, bond yield, breaking the 5% level, and then the conversation was how high can bond yield go because the economy is so strong, and the strength of the economy is essentially driven by companies having developed a natural immunity against interest rates. They essentially have locked in long-term, long duration or long maturity in terms of financing. But now we're starting to see weakness in the data, and this is essentially behind the collapse in bond yield. So I think that we are going through a process of readjustment towards a no landing scenario, from a no landing scenario to a soft landing scenario.
Okay, so more needs to be priced in, but if what's happening there is this realization that perhaps there will be some sort of landing and the economy is not as strong, it gets back to what Manus started the show with. What in the world is happening with equities? Jean Boivin over at BlackRock addresses this too. He writes, Coco, that the question we ask is if the surge in rates has fed through to equities, and our answer is not yet. We think there's more downward adjustment to come, but we see a better environment in 2024 once the adjustment is complete. Coco, do you agree with that? Is there a downward adjustment that needs to also happen in equities?
Yeah, I mean, this is a brilliant point. I think people tend to forget that equities are driven by two factors: the discount rate, which the central bank can essentially drive and control, but also growth of earnings. And the reason why bond yields have gone up so much, it's not only because of higher interest rate, but it is precisely because the economy is also growing. So if we have an environment of strong growth, you'll see equity go up and bond yield go up at the same time. The question is whether rates will stay higher longer than the strength of the economy. And one of the things with equities is that they are immune to interest rates, at least transitory, simply because they have financed, they have done a process of balance sheet repair by locking in long-term interest rates at roughly 3% for IG. This is 5 to 7 years maturity. High yield is shorter, 3 to 5 year on average. So they're not sensitive to the higher interest rate. And the second key point is that they benefited from greedflation, i.e. they've raised their prices by more than was warranted and managed to got away with it because of excess savings. So equities are essentially resilient because underlying strength and profit margins are high, but you need to wait for the next refinancing wall, which is likely to be in 2025, and a slowdown in the economy before the market takes a hit.
Well, I just bought a coffee over the weekend, so I can absolutely assure you, I won't tell you which brand, but it was rampant greedflation. You can all IB me, and I can tell you which one it is. On that note, the risk is this. FCON. If you look at FCON, this is what Lagarde, Bailey, and Powell perhaps need to push back against, Coco, because the market now thinks 100 basis points of cuts by December of next year. Here is FCON. It's turning easy, but what is the risk? And I don't think it will, but I'm curious to see what you say. I don't think it'll become light. I just wonder, does this FCON, I suppose, easiness run out of puff?
Yeah, I think if you look at real interest rates, so financial conditions are clearly not as tight as they ought to be or could be. And this is, again, a question with regard to the consumer, because they've essentially had, excess savings to the tune of $2.5 trillion in the US at the peak, so 10% of GDP. So today it's probably down by roughly 60-70%, depending on the assessment. But this have acted as a buffer. The last but also very important point is fiscal spending and the US election next year. So one of the driver of the resilience is not just because it is not just about quantitative tightening and higher interest rates. Is we did not have a fiscal tightening, because you have to remember the original sin, so to speak, or the reason why we are in this high inflation environment is because of a fiscal whatever it takes response to COVID to save human lives. And this kinetic energy that was injected in the economy is still driving growth, and fiscal stimulus and the budget deficit is still a key driver.
Okay, Coco, stick around with us. We have much more to discuss. Coco Agablua from SocGen. First, Manus, let's get to some of the other top stories that are trending on the terminal this morning. Telecom Italia has approved the sale of its domestic landline network to KKR. That'll be a deal for $23.6 billion. The company made the deal without making it conditional on a vote by shareholders, with the sale expected to close by next summer. Telecom Italia's biggest shareholder, Vivendi, opposed the agreement and said it would use any legal means to challenge it.
About 300 Wall Street executives are expected to attend a global finance summit in Hong Kong this week. Citadel's Ken Griffin, Goldman Sachs' David Solomon, and Morgan Stanley's James Gorman are descending on the city where finance firms have slashed hundreds of top jobs. But Hong Kong has still one key feature that ensures firms keep a foothold. It's the economic and financial links to the Chinese mainland.
Well, Manus, Elon Musk has revealed his own artificial intelligence bot to challenge ChatGPT. The billionaire says the Grok platform will pull real-time information from messages posted to X and has a, quote, rebellious streak and, quote, loves sarcasm. A limited group of U.S. users are testing the prototype, which has been in development for 2 months. Loves a bit of sarcasm, rebellious. Sounds like Bloomberg brief to me, Manus.
I don't think it'll troll my Twitter. I don't think there's anything. It's just factual, unemotive on my Instagram. A little bit more me. Coming up in the show, it's Monday morning. What better way to kick it off for you than to understand what Warren Buffett's actually doing? Berkshire Hathaway. We discuss what the billionaire and where he's piling his cash on the curve. That's next, Danny.
And Secretary of State Antony Blinken visits Turkey to stop the spread of war as Israeli troops encircle Gaza City. We're going to discuss that next on Bloomberg.
that's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
Your grandfather was a famous basketball player. In fact, he's in the Basketball Hall of Fame. Did you have any of his basketball genes?
You know, in my family, David, you didn't do very well at the family barbecues if you couldn't play hoops.
It's DC FinTech Week, and Bloomberg is on site. Live from Washington, Kaylee Lyon speaks with Grayscale CEO Michael Sonnenschein and others. Tune in for a special one-hour episode of Bloomberg Crypto. Bloomberg. Context changes everything.
This is Bloomberg Brief. Danny Berger in London, Manus Cranny in New York. Manus, let's talk Berkshire Hathaway earnings. Over the weekend, their cash pile had a fresh record, $157.2 billion. It had both rising interest rates and a lack of deals on its side. Joining us now is Bloomberg's Charlie Wells. Charlie, how did they pull off the beat in operating profit?
Yeah, Danny, so it's all about insurance here. So, Berkshire Hathaway is such a bellwether for the American economy. They are so diversified. Insurance, it's rail, it's Dairy Queen, it's Nebraska Furniture Mart, so many different businesses. And last year was a really tough year for insurance, which Berkshire Hathaway is so invested in. They've got Geico and a number of others. But actually in the third quarter, profits from insurance actually brought in $2.42 billion, which helped offset some of the weakness. Now, Berkshire saw some weakness in the likes of railways. They saw some weakness in the likes of home builders. But it was that insurance boost that really helped them in the third quarter.
Manus, have you ever eaten at a Dairy Queen? You're in America now.
Do you know what? I was
Have you
just
ever
going to
had
say to Charlie. I have no idea what Dairy Queen is. No, I'm just getting sort of a reality check on food options in the. What is Dairy Queen? Before we move on to $157 billion, what can I get at Dairy Queen? Anything healthy? Doesn't sound like
you can get, I think, a Frosty. There's some really good ice cream. Yeah, nothing healthy. Sorry, Manus.
Okay, Irish man abroad in New York. Send in your IBs on what I can get to eat at Dairy Queen. She's bad, isn't she? $157 billion. So even I'm opening a cash account. So you've got to say to yourself, okay, it's still rich pickings at 5.5%. Is it rich enough for Warren?
That's a great question. And I mean, this feels almost like the most frustrating shopping trip that you've ever been on, where you've got the cash, you're looking around, and you just don't see anything to buy. And that's a really big issue because Warren Buffett is the world's biggest value investor. He finds great value, and in this environment just doesn't seem to be seeing that, and is holding onto this cash pile. But we also know that a lot of this money is parked in short-term treasuries, and what has been happening with treasuries recently, their yields have been elevated. So that partially explains this huge cash pile, but it also is this fact that, at least for Berkshire Hathaway, it doesn't seem like there's a lot of good stuff to buy out there right now.
And Charlie, you kind of mentioned this, but I want to get more into it. Besides showing the world Manus's taste for fast food, they own everything, right? From, as we said, Dairy Queen, insurance business, rail. What did it show us about the American economy?
Yeah, I mean, Berkshire Hathaway, headquarters in Omaha, middle of America. This is a company that really is in the middle of the American economy. And it's interesting. I mean, we've seen with the American American economy, higher interest rates, posing some problems for the economy, but still, chugging along. When you look at Berkshire Hathaway as well, you see under the hood some stress for these higher interest rates, on those home builders, on certain segments. But at least when you look at some of the retail businesses within this huge umbrella of Berkshire Hathaway, when you look at some of the manufacturing, they actually had some growth in the third quarter. So, not as dark of a picture as one might think. And actually, Buffett earlier this year at that AGM, his very famous meeting in May, kind of warned that there could be some potential downsides coming forward for earnings, but the worst case scenario doesn't seem like it's spelled out.
Yeah. All right, Charlie, thank you very much for joining us. That is Bloomberg's Charlie Wells. And SocGen's Coco Agabloa is still with Manus and me this morning. Coco, look, we have this cash pile from Warren Buffett. If you look at just the broader market, Bank of America had this research out last week saying that cash inflows are annualizing $1.3 trillion. If I can go to the very, very front end, if I can go to cash-like instruments and get 5%, why go anywhere else right now?
Yeah, I mean, cash is definitely king, and the king is back. So, I mean, Warren Buffett with $157 billion is essentially, if he were to put all of that in money market funds, he would be essentially annualizing $8 billion in excess in interest income. And this is pretty spectacular. So from an asset allocation perspective, I mean, cash used to have negative interest rates and was a drag in performance, and today it is clearly a major diversifier, particularly in an environment where equity and bonds are essentially moving in the same direction and not providing the same diversification with huge duration risk. So yeah, this is one of the reasons we see so much volatility in the long end bond market, because there is an alternative today, and that's cash, and it's yielding a pretty attractive carry.
Coco, let's just extend on that, because one of the great debates is, when is there enough term premium in the longer end of the curve to tempt investors in? What is the clearing price for bonds? What's the clearing price for the auctions? We'll see a little bit this week. You, before the hurly-burly of last week, were suggesting that term premium in the US and in Europe could extend a little bit more. And I just want to get a sense, do you still believe that? Do you think that term premium will rise by another 30 to 70 basis points in the United States of America? And is that what it's going to take before you see significant buying, or do you think we've already seen the beginnings of that, and maybe term premium does not need to rise as aggressively as perhaps you once thought?
Well, I think term premium will have to rise as we get closer to the end of the business cycle. Typically, historically, we tend to see a more of a bull steepening with a 2-year essentially pricing more of a recession and cuts, and the long end starting to price the normalization of the cycle. What was pretty unusual this time around was a bear steepening with the long end selling off, even though we are supposed to head to a recession. And I think that volatility was driven by technicals, the excess supply of treasury by the U.S. Treasuries, and then the dynamic of lack of carry. But I think now the next step would be to see more of a bull steepening as these rate cuts essentially gets priced in and the economy slows down into the second half of next year, which is our core view at this stage.
Okay, all eyes down for the second half of next year. We can all breathe a little bit of a sigh of relief between now and then, and I can go and investigate what I can buy at Dairy Queen. Coco, always great to get you with us. Coco Agabloa there on the markets with Danny and myself. Quick snapshot of the bond markets. You just heard it from Coco Agabloa himself saying SocGen calling recession in the second half of next year. 100 basis points of cuts are priced in. Yields rising ever so slightly this morning, 2.7 on the 10-year government bund in Germany. Good morning from New York and London.
What did you learn in the last 40 years about leadership in politics?
Well, I've learned a lot about leadership for a very long time, observing it in others, recognizing what is needed to get the job done. And I always define it in this way. Know your why. You have to know why you're doing this because you will be under attack, this for sure. Know your why, know what you're talking about, know how to get it done, think in a strategic way, and then that's all up here. And then also connect directly with people. If you can show them how important what you're advocating is and what you know you're talking about so they trust your judgment, and you have a plan, you will have followers. You will be a leader.
When you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center.
And that's news when you want it with Bloomberg News Now. Get it 24/7
on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
This is Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York. Manus, a story from the FT that caught both your and my eyes, talking about BCG, McKinsey, the big consultancies of the world. Last year, there was this immense talent war. They raised starting salaries by the most in 2 decades. Bad news for those who are starting out and going to be hired by them this year. For those being hired in 2024, you will get the same salary as the class before you. That's right, they have frozen the starting salaries, Manus.
There's a lovely line in this story, isn't it? You know, it's the hangover party. But we should just say that at McKinsey, if you've gone and you've done your higher MBA, you get $192,000. And how much does it cost to go to Harvard for 3 years? I haven't met many people from Harvard or Yale yet on this trip.
I do think it's 2 years for a business school. I could be wrong there, but $75,000 is how much that'll set you back. So you know, you'd hope you'd get a pretty solid starting salary if you're going to spend that much to go to business school.
That's still a positive return. I still go back to, I mean, you know, I wanted to come back as a young junior investment banker. Truly what I want to come back as I want to come back as the class of 2023 that did their internship at Citadel. Their interns, Citadel Securities, paid up $120 an hour for the young ladies and gentlemen and kids to come in. So you know what? There's still money in finance.
There's still money there. Might be frozen from last year, but it's still there. All right, Manus, a quick look at these markets as we take you to the break. S&P 500 futures, after the best week of the year, are up 0.2%. Brent crude up nearly 2%.
Capital. It's been volatile. From bank crisis anxiety to AI exuberance. Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
This is Bloomberg.
Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. U.S. Secretary of State Antony Blinken arrives in Turkey as part of his latest regional tour to try to prevent a spread of the Israel-Hamas war. Berkshire Hathaway, it's sitting on a record cash pile boosted by higher interest rates and a lack of takeover candidates enticing enough for Warren Buffett. And investors ramp up bets on interest rate cuts in the U.S. and Europe. We're going to hear from Jerome Powell, Christine Lagarde, and Andrew Bailey this week. Now, ahead of all that central bank talk, we are seeing some selling in the 10-year. Yields are higher by about 2 basis points, but that doesn't do anything nearly to undo what we've seen over the past week. We went from 5% rates to 4.5% rates. We saw the biggest drop, the fourth biggest drop since the great financial crisis. Likewise, we also saw a weakening of the Bloomberg Dollar Index. That saw its worst day since July on Friday. So that trend continues. Again, as this market starts to price in sooner rate cuts, we're now betting on June is when the rate cuts start. Previously, before last week, it was July. Meanwhile, NYMEX crude, New York crude, is up nearly 2%. This follows over the weekend. We heard from the Saudis and from the Russians, Manus, affirming that they would indeed hold on to those supply cuts.
Well, Danny, that fourth biggest drop in yields gave an irreverence really to risk, didn't it? It let the equity market go on a tear. You're looking at the S&P 500 was up 6% last week. It builds on that narrative. The NASDAQ was up 6.5%. The market, the equity market, is paying no attention to services at the slowest in 5 months, paying zero attention to the jobs report, apart from the fact that they can now price in. They're unbridled in their pricing in of 100 basis point cuts by the end of next year. And it is that pricing of rate cuts that gives these equity markets a new infusion. Add on to that, you have the second biggest issue, which is, of course, from Coco Agablo over at SocGen, which is there's a kinetic energy to these equity markets because they are refinanced. Investment grade has refinanced themselves probably for the next 3 years. So these equity markets, VIX is dropping, the biggest 5-day drop in 21 months on the VIX. By the way, fear can be just as costly as greed, according to Subramaniam over at Bank of America. The reason why we've got the Stock 600 up here for you, it dips ever so slightly, is because we've got Ryanair, the first ever regular, normal, run-of-the-mill, oven-cooked dividend, 400 million euros. They're cautious on deliveries, and they have very limited visibility, so maybe that full revenge tourism dissipates for the winter season. We'll hear more from Michael O'Leary later in the day. We've got the CFO sound coming up. Danny.
I still think that was so interesting from Koku, because we talk all the time about why aren't stocks reacting more to bonds? If the economy is getting worse, why are stocks still rallying? He talked about the resiliency in stocks. And again, I find this very fascinating, that stocks will be resilient until the next refinancing wall. And Manis, according to Koku, that's not going to be until 2025. If rates aren't going anywhere, or if they're coming down by 100 basis points and more, I mean, stocks can probably hold up then.
Well, that then bolsters the idea of no landing to maybe, if you do pay any attention to the data that you had on Friday, perhaps the idea of a softer kind of recession is in the making, but it could be extend and pretend on that narrative until the second half of next year. But Danny, the other major story we're tracking this morning on Bloomberg Brief is, of course, the geopolitical state of play. We have, before landing in Turkey, the Secretary of State, Antony Blinken, made an unscheduled stop in Baghdad, and that was to meet with the Palestinian authorities.
To anyone who might seek to take advantage of the conflict in Gaza to threaten our personnel here or anywhere else in the region, don't do it.
So that was a warning shot from the Secretary of State there, Blinken. Let's bring in our Bloomberg opinion editor, Bobby Ghosh, joining us now. It was a whirlwind tour for Blinken. The Jordanians have brought the ambassador back from Israel. The narrative from a number of the Arab states is, we don't just need a pause, we need a ceasefire. So is the chasm opening up further between the Arab world and the American, and I'm very clear on this, the American response and support for Israel in their current war?
The chasm is indeed widening. It's certainly widened on the Arab street, where we've seen all these demonstrations getting more and more intense. The anger is not just directed at Israel, but to your point, also to the United States, which is seen as being an enabler. You know, that trip by Biden to Israel a couple of weeks ago, the embrace of Bibi Netanyahu, those images are not going down well on the Arab street. In the Arab palaces, things are slightly more nuanced. I think most Arab rulers want to see Hamas defeated, but they don't want to see large Palestinian casualties happen. They need to respond, even though many of these are not elected leaders. They do need to respond to the emotion on the street. And so you're seeing things like ambassadors being withdrawn, ambassadors being called in, and Israeli ambassadors are being called in and given a talking to. It's many Arab states want to have good relations with Israel. We saw a lot of development, a lot of movement in that direction before this conflict. Now all of that is frozen. Now everyone, the first thing they say and the fifth thing they say and the 10th thing they say is reduce the number of casualties, allow, not to your point, not just a humanitarian pause, because a humanitarian pause really means a break before the next round of slaughter. Now people are talking about ceasefire. Enough, done with, now start talking.
Right. And Bobby, I mean, there's been opinion pieces written, this idea that the U.S. doesn't need to distance itself from Israel, but from Netanyahu. Is something like that even possible?
It's very difficult, Danny. Netanyahu has been Prime Minister of Israel for so long now. He's so closely associated with all of Israel's policies of the last 20 years that it's really difficult. I think the Biden administration has been trying to make the argument that the United States is for Israel, not for Bibi Netanyahu. Unfortunately, in the eyes of much of the world, certainly in the Arab world, Israel is Netanyahu and vice versa. It's really difficult to separate the two.
The people that I'm talking to in the Middle East have said they're reflecting on various times gone by in the 1980s, where there was an extraction of factions within Israel, and they were put into exile. You know, for any of this to progress, can we make real progress with Bibi in charge, or does the narrative need to shift where you have America saying you need to go and we need an interim prime minister that can let us find an off-ramp with this to deliver a solution post this war?
I think that the Biden administration has been quietly briefing journalists on the side, making this exact same point, that Bibi's got to go. It's difficult for them to come out in the open and say this. You know, you don't. Of course. He's a democratically elected leader of in the middle of a close ally in the middle of the war. But the administration has been briefing journalists exactly along the lines as you say, Manus. And here they're also pointing out that Bibi is incredibly unpopular in Israel right now. All the polling coming out of Israel suggests the vast majority of Israelis want finally to see the back of Bibi. Whether they want to do it right this instant in the middle of the war is a different question. The polling hasn't sort of drilled down to that, the polls I've seen anyway. But they want to see him gone. The Biden administration wants to see him gone. He doesn't want to go. He doesn't want to go, and his right-wing allies who make up his coalition are not calling for him to go. Until that happens, that would be the inflection point. Okay. But that's not happened yet.
Right, yeah, let us not forget that before October 7th, there had been protests in the street of Israel from all sorts of people against what Netanyahu him and his government had been doing. Bobby, this also seems to make complicated the idea and the end goal of what happens after the bombardment of Gaza ends. How does it complicate things if at the same time the U.S., those within Israel, are calling for a new prime minister when, again, it doesn't seem as if there's a clear goal or outcome for what they're doing in Gaza right now?
That's part of the frustration that the Biden administration has with Netanyahu and the Israeli government right now, which is that they're not articulating a vision of what happens afterward. They're talking in fairly vague terms about what their goals are. Oh, we're going to destroy Hamas. What does that even mean? When you declare Hamas to be destroyed, it's not a conventional army where a general will come and sign an armistice or a surrender document. So when do you declare that Hamas is ended? And then what happens the day after? It's now been more than a month since the horrific terror attacks on Israel. Israel has been conducting this military operation now for several weeks. It's had more than sufficient time to articulate some kind of a strategy about what happens next. It has not done so, and this is adding to the frustration. When Blinken is traveling through the Middle East, he's being asked that at every point. What are you going to do after? When does this end, and what are you going to do after? And at the moment,
well, what is the credible? It's far from us to debate what the most credible solution is, but at this moment in time, he speaks to the PLO. Yeah. Abbas is a very formidable individual, or does he still have the ability? Does he have the ability really to be part of the solution for Blinken and the White House?
Well, the White House is clean.
Or is it going to be a UN, US? I mean, I've seen various things. UN, US style-led coalition trying a peacekeeping mission in Gaza. That's not really a formidable solution, though, is it?
No, I don't think the US would have credibility on the ground because of the association with Israel. Abbas has been there forever, but he's deeply, deeply unpopular, and he has run the West Bank into the ground. Now, he has had constraints on what he's allowed to do, but it is a very sclerotic administration that he runs. He's not popular. He hasn't faced an election in nearly 2 decades. So the solution is not going to come from there, I don't suspect. Some sort of an interim United Nations run, led by the Arab members of the United Nations administration / peacekeeping effort. At the moment, that would seem to be the most logical way to go. Nobody is stepping up to volunteer, not yet.
Okay.
Okay, Bobby, thank you so much for joining us on this Monday morning. Bobby Ghosh of Bloomberg Opinion. Now, coming up, Manus and I are going to talk Ryanair. It announces its first ever dividend as a unit of Ryanair's CEO says that airfares will be rising over the coming years. We're going to hear from the company's CFO next on Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
So you told your mother you'd like to go to Africa and see the chimpanzees, and what did she say?
Not the chimpanzees. I would have studied anything.
Well, what did your mother say to anything?
If you really want to do this, you're going to have to work really hard. And if you don't give up, hopefully you find a way.
This is Bloomberg Brief. I'm Danny Berger in London with Manus Cranny in New York. Now, Manus, if I were to tell you that KKR was planning to buy Telecom Italia for over $22 billion, you'd probably think shares would be rallying this morning. They're not. Let's get into some of the Europe movers. They are down more than 2% because Vivendi says it will challenge the company's approval.
Yep, well, that's a classic KKR deal, you know, buying the infrastructure for the longer-term cash just churning through the system. Just look at Norwegian Air, up over 1%, stock rising this morning. They've given us their October traffic numbers, earnings beat. Strong fourth quarter bookings momentum. That's different, obviously, to what Ryanair are telling us. Analysts expect the beat to trigger consensus upgrades, Danny.
Yeah, I mean, look at these Ryanair share prices, man. It's up more than 6%. Behind that, its first ever dividend. $430 million is the payout. It has growing traffic, but on the other side of things, they've warned that Boeing deliveries may slip by a few months, Manus.
Indeed. Well, let's stay with that Ryanair story. We caught up with the CFO, Neil Sorahan, on the plan for its very first dividend payout. Take a listen.
We're now comfortable that we could also sustain an annual ordinary dividend. To put this in context, the first ordinary dividend of $400 million equates to what our shareholders invested in the height of COVID. So we're delighted this morning now to be able to effectively refund that. They put $400 million into Ryanair in September 2020. We then raised a bond on the back of that and came out of COVID with a very strong balance sheet. But going forward, the board have committed to 25% payout of prior year profit after tax starting from the next financial year. So 35 cents, which will be paid between February and September of next year. So I think it's a strong vote of confidence in the business that we have the balance sheet strength to be able to sustain large capex program, invest in growth for our shareholders, but also to return some funds to them as well.
Well, you mentioned a good chunk of that is coming from your bond issuance as well. Neil, I want to go there next, because if you actually look at your debt distribution, you have about $2.8 billion in debt coming in due by about 2027. At the same time, you have this massive payout promise. A lot of people would look at your numbers and say, well, this is great right now, but what happens when you start to see the macroeconomic risk really weigh on European consumer demand? A lot of questions about how quickly recession is going to hit in Europe, and by extension, how that's going to hit your bottom line. How are you going to service the $2.8 billion of debt you have coming due?
Yeah, well, we finished the half year with $3.6 billion in cash, and that was after paying down $1 billion in debt in August alone this year. We had a $750 million maturing bond, and we paid down $260 million of our revolving credit facility. We've effectively paid down half of our debt in the past 2 years. We've got a very manageable profile with the next bond maturity in 2025. 2025, and then the final bond maturing in 2026. So similar to what we've done over the past 2 years, we expect to be able to service the capex out of our own cash resources, but also the bonds as well, which puts us in a very unique position compared to our competitors who are raising funds in rising interest rate environments, paying significantly higher lease costs for their aircraft. We're actually paying down debt out of our own cash resources, which hugely widens the cost advantage that we have over everybody else. And then just touching on your demand question, demand is very strong. As you saw, we had 105 million passengers in the first half of this year. We're targeting 183.5 million on a full year basis. We've 90% of our summer 2024 schedules on sale already, and bookings are strong because capacity is very constrained in the market at this point in time, and likely to remain constrained. We're only at about 94% of pre-COVID capacity, and I think capacity will remain low for some time to come.
The Ryanair CFO Neil Sorahan there speaking to Bloomberg earlier. And Manus, we have this story, airlines struggling with high jet fuel prices, and at the same time, oil prices, they are continuing to rise.
They are. I mean, you've got Saudi Arabia and Russia. This was a news headline yesterday. They're going to stick with a curb, which is the 1 million barrels a day of unilateral cuts, Danny, coming through and continuing that until the end of the year. Let's get to Alex Longley. He is our reporter on the story. So a lot of people were anticipating this, but it was still a little bit of a belter on a Sunday afternoon. Do you think they're trying to take some of the heat out of the November meeting that we're gearing up to go to in just a couple of weeks?
Yeah, exactly. I think, as you said, this was widely anticipated, but it's a reminder to the market of what Saudi Arabia and Russia are staying the course with here, and that's backstopping any sloppiness that we might see into early next year. I think this morning you're already hearing from analysts talking about further extensions into the first quarter of 2024, and that's because people's balances just don't look as good for early next year. And this is just a sort of a refresher that Saudi Arabia and Russia are really here to stay the course and to underpin crude prices at these current levels, certainly in the 80s.
And amid this, we've seen basically all of the war premium unwind from the war between Israel and Hamas. What's driving that specific part of oil prices right now?
Well, on the one hand, we've had these OPEC plus cuts, but you have to remember this is against a macroeconomic backdrop that's not looking great. Some of my colleagues writing at the weekend, diesel and naphtha, two of the fuels that really power the global economy, look pretty dreadful at the moment. And particularly in Europe, that's because industrial demand is so bad. So that's what the market's been focusing on after we've not seen any disruption in the Middle East from the conflict. And that's why we've had this pullback and then support today from the OPEC plus cuts.
Do you think we just get back to basics? Sorry, Alex.
Sorry, go ahead, Manus.
Do you think we just get back to basics and we look at China and we look at the demand? I mean, if you look at the Saudis' pricing to Asia, it remains firm. But is it sort of fill or kill on breaking $100 and what happens with China?
Clearly, China is going to be the biggest driver. You talk to anyone from oil traders to tanker owners, that's the core of demand. Yeah. But I think if you talk to traders at the moment as well, they worry a lot about what's going on outside of China. China can hold up on its own, but if the rest of the world is slowing, that makes a $100 narrative pretty hard to fulfill for the time being. Inventories, however, are very low, and that's what's keeping the bulls excited at the moment.
All right, Alex, thank you very much. That is Bloomberg's Alex Longley. Manus?
Danny.
I feel like I keep interrupting you today.
Well.
I don't know what's going on.
No, do you know what it is? Just over enthusiasm for a Monday morning. You know, you've not done your spreadsheet. I just want everybody to know that she's not done her spreadsheets.
I didn't.
Yeah, and she didn't find enough of a hard fact of the day to call me and impress me at like 3:30 and go, I found the fact of the day for you. Have you?
Yeah.
No.
It's true. The
spreadsheets
for some reason ground me in the morning and stop me from talking all over you. So I'll get back on it tomorrow. All right, Manus, we are going to take a look at some of the market moving events to watch throughout the week. A lot coming up and a lot of Fed speak.
think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close
A lot of this was priced into the U.S. session.
to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to Bloomberg Brief with Danny Berger in London, Manus Cranny in New York. Let's get you set up for the week and a look at what's ahead. On the earnings front, there's a lot. UBS, Uber, eBay, and Occidental all report on Tuesday. Disney, Ralph Lauren, MGM Resorts, they have their results on Wednesday. We're also going to hear from major central banks with Governor Bailey, Chair Powell on Wednesday, and then President Lagarde on Thursday. There's also some key eco data on deck. We're going to get inflation data out of Germany and China on Wednesday, U.S. jobless claims on Thursday, plus UK GDP, UMich sentiment on Friday. Manus, I hope you got your sleep over the weekend. That's a lot.
Yeah, can you pack any more into that sort of the week ahead?
Don't think so.
Don't think so. So I don't know whether you have a car still in the zone that you live in London. I had one for many years.
I don't even have a driver's license. I don't have a UK driver's license. So I definitely don't.
That's actually a curveball of all curveballs on a Monday morning. So, you just sort of hand Danny a nice line about, oh no, Manus, I don't have a car, I live in zone whatever, and you go, no, I don't even have a driver's license. Which reminds me, I need to get my American driver's license. But Tesla, here you go. So the least expensive car that they have so far is about 42,990 euros. Looks like they are going to produce a 25,000 euro electric vehicle in Berlin. Now, this is according to Reuters. So that is going to be, that's going to be a real game changer. I mean, the Model 3, the least expensive one is 42,990. 25,000 euros, you'd have one of those, wouldn't you?
Yeah, not too bad. Hey, look, if you don't get one of them, you can get an
I actually
Uber
deeply want
or
a
Lyft
smart car. I want a smart car, actually, for New York. I don't think
What
there's
is a
enough
smart car?
It's the little car.
Oh, like the little smart car.
Yeah.
That would be really good for getting around New York, actually. I think that's way better. I mean, you can't have like a luxury car in New York City. That thing will get ruined. There's no way.
I've come to the conclusion, life here, I mean, I don't need to do understated. I just haven't got as much as everybody else. I think that's the general conclusion. Can I afford an Uber? That's the question.
Yeah, I love that. Understated, not by
Elegance.
choice. Yes, Manus. Uber, they're going to have earnings on Tuesday. But here's this one headline now. Uber and Lyft to pay $328 million in back pay to New York drivers. So if you take an Uber, Manus, the drivers, they'll be getting paid more.
They'll be happier. They'll be smiling. A bit like you and I at 5 a.m.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffman arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to
be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffman also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Audience worldwide, this is Bloomberg Surveillance on TV and radio. Alongside Lisa Abramowitz, I'm Jonathan Ferro. Getting your week started with equity futures on the S&P 500. Shaping up as follows, positive by 0.2%, coming off the back of the biggest weekly gain of the year so far. Bramo, the scores last week, the S&P 500 up close to 6%.
Do you buy it? This is going to be the key question this week, especially because we're not getting a whole host of economic data. Is this going to stick with some sort of conviction? Have we sort of gone across the Rubicon? Or is this an anomaly really set up by a lot of extreme positioning?
Barclays does not buy it. The team out with this note. Listen to this. This dovish turn may have backfired, with financial conditions easing significantly in the last week amid some softer data. We retain our view that data momentum will force another hike, that they acknowledge they're going to push that out from December to January. But can you imagine restarting the hiking cycle in early next year?
No, I can't. And I can't imagine it because really what we saw a reset of in all of the notes that I read over the weekend is finally everyone's sort of reviving their inner recessionistas and saying, actually, you really think that you could get the most aggressive rate hiking cycle in the whole history of modern finance and not get something breaking? Just wait. And that seems to be suddenly the comfort that people are drawing that they'd all ignored for so long as they were talking about the reacceleration of inflation.
Deutsche Bank, the Fed is done. Citi, the Fed is done. Rick Reeder, BlackRock, the Fed is done. And that's quickly become the consensus view after this big bond market reversal we've seen in the past 2 weeks.
What I don't think people have grappled with, and today we'll get the sense of that from the Senior Loan Officer Opinion Survey that comes out later today, and we'll go over that in a bit. We don't have a sense of what the pain has already been, especially of holding rates at 5% for this long. People have not imagined that because we don't have a sense of what the long and variable lags are that Jerome Powell sort of tried to reprise and sort of is this catch-all phrase for we have no idea what's going to happen.
Do we have a sense of the politics 12 months out from the election in 2024? Big poll coming out of the New York Times over the weekend. Big leads in 4 key swing states for the former President Donald Trump over the current President Joe Biden.
2 things. You read the details of this. This is a vote against Biden. This is not a vote for Trump. Any other generic Democrat up against Trump would win by 8 percentage points in this poll. Kamala Harris would do better than President Biden.
Which is kind of shocking.
Which is kind of shocking. You take a look at the internals of this poll, and what this means is people do not want a repeat of what they had 4 years ago. The question is, are they going to get it regardless?
52 to 41 in places like Nevada. Just jumped off the page for me over the weekend, Bramo.
And of course, Michigan, really front and center, given some of the pushback versus the recent, against some of the recent Biden policies. Honestly, this poll is going to cause a lot of hand-wringing. Whether this actually causes a different cast of characters heading into next year, I'm not sure.
We'll catch up with AMH a little bit later on this morning. She'll join us in the 7 o'clock hour. Let's turn to the price action, how we're set up this Monday morning. Equities on the S&P 500 pushing higher by 0.2% after a massive week of gains in the equity market, inspired by a move lower in bond yields. This morning higher by a couple of basis points. Your 10-year 4.59. The euro showing some strength against the weaker dollar in the last week. Lisa, the euro against the dollar right now, 107.49.
That is shocking. It is not a 106 handle. It is a 107
no longer.
handle. Yeah, exactly. Today, what I'm looking for, and throughout this week, it is a quiet week when it comes to economic data. Today at 2 p.m., the Fed is releasing its Senior Loan Officer Opinion Survey on bank lending practices. This was the slews that everyone was talking about 3 months ago, suddenly very much front and focused because we've seen a bank index, a regional bank index, still flat on its back relative to where it was during the depths of the pandemic. Do we get a sense of how much credit is contracting? You talk about who the cast of characters is going to be, John. We get the third Republican primary debate on Wednesday at 8 p.m. in Miami. There is going to be a smaller crew this time. The potential members that are going to show up so far, Ron DeSantis, Vivek Ramaswamy, Nikki Haley, Chris Christie, can any of them replace the former president at a time when a lot of people agree that it is going to be maybe difficult for him to win if it is anyone other than Joe Biden running against him?
I'll wait for Anne-Marie's thoughts on this a little bit later this morning, but I think ultimately a lot of people just assume, and have done for many months now, that we consolidate behind one candidate. Out of the candidates that you just put up on screen, is that going to be Nikki Haley? Nikki Haley has the momentum at the moment, but who else wants to drop out going into Christmas?
And how much really is national security going to be front and center? And meanwhile, Fed Speak does return after the quiet period. Fed Chair Jay Powell is going to be speaking on Thursday. There are many others as well, whether he clarifies the maybe misconception that the market has baked into the easing of financial conditions, we shall see. But all of this will have the drumbeat of $112 billion worth of 3, 10, and 30-year treasuries being sold throughout the week. The reaction of that might be more telling than anything the Fed Chair says.
There is a lot of supply coming later this week, which is worth keeping an eye on. No doubt about that. Joining us around the table, Chris Ferrone, partner and head of technical and macro strategy at Strategas, a Baird company. Chris, good morning.
Great to be here.
Have we got the ingredients lined up, the recipe for some bond market stability?
You know, it's funny, as we were talking about as we came on, there is such confidence here across the street that bond yields have peaked. Right? Yields are off 40 bips from the highs. I think we got to see a little bit more to say with conviction that we're done with rates up for this cycle here. I mean, the trend in yields is 3 years old. It's been pervasive. And after 10 days, we're all ready to close the book on it. I think we need to see more. At a minimum, I would say, what's the plot twist in front of us? I think the playbook of rates have peaked, therefore buy risk everywhere. It seems a little too October 2022, not October, November 2023. And, you know, is the plot twist, A, we haven't seen the top in yields, or is the plot twist we have, and it's not as bullish for risk as many people think? That, I think, is the big question as we look ahead.
Before we get there, we need to break into that and drill down on that. Okay, you said I need to see more. Do you need to see more in price or more in the data? What do you need to see more of?
I want to see price's interpretation of the data. I mean, we're sitting here, 10s are still above the 50-day moving average at, call it 450 and change. The 200-day is still upward sloping. The trends for 10-year and 30-year yields everywhere around the world are still up. You could convince me the short end is probably topping in yield here. If you look at some of the 2-year yields across Europe, I can get there. I just think it's way premature to make this call with longer dated bond yields yet.
To build, though, on what John was talking about, last week was set up with a pretty perilous type of technical behind it, where the short positions by hedge funds on U.S. government debt at the highest levels going back to 2006. Have we washed out some of that unevenness, or can we expect bouncing around by 50 basis points every couple weeks in Treasury yields?
You know, it's funny. I think there's this tension in the positioning data. A lot of the stuff we look at from, say, CFTC would suggest there's big shorts still in the long end of the curve that might need to cover here. But when you kind of reconcile that with some of the anecdotal information out there, I mean, look at the last 2 weeks. Cover of Barron's, buy bonds. Wall Street Journal, buy bonds. FT, buy bonds. There's this tension here for a bear market that's 3 years old in bonds. You would expect there to be more fear out there. And that just seems so inconsistent with how things bottom.
When we talk about the data and the response to data, is it the data of economic slowing, or is it the data of how much debt the U.S. Treasury is going to sell? Is that more important for the longer end of the U.S. Treasury curve?
Well, I think that's the secular tension. It's why we have the steepener. I like the steepener, right? So there's a couple ways we get the steepener. Either 10-year yields or 30-year yields continue to rise and twos fall or twos stay stable, or twos fall faster than the long end. So I think the steepener is still in play. If you look at a chart of the unemployment rate versus the steepener, it's the same exact chart. I mean, we just went 3.5 to 3.9 on the unemployment rate in a couple months here. So I think there's a case to be made. The steeper curve here is playing very much as it tends to do late in a cycle. You tend to get economic deterioration, you tend to get a steeper curve, you tend to get a rotation in the equity market away from the pro-cyclical corners to the more defensive. What was one of the standouts last week? Utilities. Right, so there's a little shift underway here that I think we want to be mindful of.
Well, to your point, end of cycle dynamics, not typically the kind of dynamics you want to buy the broader equity market on. Yeah. What we saw last week was a major rally in the bank sector, not just the index. The banks on KBW, Lisa brought up the chart, up 11%, best week of the year. We all understand why. It's the relationship between bonds this year and banks. It's not typically the relationship we typically see. From your perspective, in your opinion, if we get a bond market reversal and it continues, is it bullish risk?
You know, I think when you look at last week, we saw something on Thursday and Friday we haven't seen all summer and all fall. We actually got very good internals. We were 8-1 on the upside on Thursday. We were about 5-1 on the upside on Friday. So I have to give that the credit it's earned. As far as the financials here, I think you point out exactly right. We've had this odd dynamic between rates up and financials down for much of the year. That seems to have reversed a little bit last week. I think the big question is, if 10s have certainly topped, and if they're going lower, is that as bullish for these groups as we think? Or are we all going to figure out, wait a second, why are bond yields falling? Bond yields are falling because there's a real problem out there. I lean more towards that camp, but I'm going to let the price action dictate that over time for me.
When does that start to change in your mind? How do you think about that process?
Look at Europe here first. The rallies in Europe last week were not as compelling or convincing. I look at DAX or CAC or the Swedenomics. They were softer and more tepid. I think that's going to be a big tell here. Go back a year ago, it was kind of Europe first to turn up and really express that pro-cyclical message. This summer, it was first to turn down and get pretty defensive. So I think watching Europe here is going to offer some clues about really just geographically how broad this move is.
When you talk about softness, one of the reasons why people justified this idea that you could get a rally in risk even with a yield decline last week was because we're going back to the soft landing camp. What's the sort of threshold where it's not soft landing and it's something just bad?
You know, one of the things we've looked at historically, now, in fairness, the sample size of soft landing is small. 1994, 1984, 1967. We don't have a lot of history of soft landings. Maybe that's the signal, that you've only had 3 of them. But what do all those 3 periods have in common? Consumer discretionary rallied hard coming out of the soft landing. So I think if you're looking for a leadership clue that would suggest, hey, this is Goldilocks, this is soft landing, I think discretionary has to be part of that. I think it's really premature to say discretionary has been resoundingly strong here. We've had a couple good days in discretionary after a dreadful last 6 months. So it's going to be a very important tell for us, I think, over the next number of weeks.
Some people have really kind of tried to wrap their head around what the implication is of what's going on in the Middle East, the potential volatility in oil prices, what we might get down the line that some people have said has kind of been hanging over the market. Based on what you've seen, has that conflict had the potential to be inflationary for a prolonged period of time? Or is it still just sort of not calculating into any of your baseline types of parameters?
I think the latter for now, although I think the history of conflict would suggest they're inflationary, not deflationary, so I want to be mindful of that. And then I would just ask the group here, what's the only asset class in the world about to make a new all-time high right now? It's gold. right? So what is the message here from gold? We've seen this war premium come out of crude oil over the last 2 weeks, and gold retained its bid. So I think there's something there we ought to be very mindful of.
Well, let's finish on what you like.
Like gold.
What do you like?
I think gold here makes a new decisive high in 2024. I think it takes a starring role on in this movie. 2,500 is our target on gold. When I look at some of the leadership within the equity market, I actually still like industrials here. I know that sounds counterintuitive to a slowdown call, but the track record of industrials in expansion to slowdown is actually pretty random. They can work even as an economy is slowing. I actually like home builders here as well. And I wouldn't get too bearish on energy. I know crude has not acted great here the last couple of weeks. The energy stocks, particularly, say, the gas-related names, actually trade okay.
Can we just finish on gold?
Yeah.
Why is it starting to work? What's happening? What's in its favor?
I've learned one thing in my career. By the time you figure out why gold is working, it's typically too late.
It.
So I enjoy the ambiguity. Maybe it's the Fed's done. Maybe it's dollar's peaking. Maybe there's an accident out there.
But for you, the message is in the price and you don't really care?
I think the message... Gun to my head, I think gold is attempting to tell us that all of these currencies are pretty bad. And dollar in particular. I mean, look at the reversal on dollar yen last week. I mean, talk about a 3 big finger move in dollar yen last week from 52 right back to 49. So I think there's something going on here with USD. I think gold is the best way to express that.
Dollar yen right now, 149.63. Chris, this was fun. Thank you,
always,
sir.
Thank
Good
you.
to see you, buddy, as always. Chris Verone there of Strategas with some big calls, particularly on gold. Bramo, gold's starting to work.
And it's because all the currencies are pretty bad, which raises this question, are we going to go back to the gold bugs that are hiding gold bars under their beds as a hedge against people moving away from, a debased currency because of inflation and higher debt levels? I don't know. I mean, this feels like back to the 1970s, right?
Only we could end up with something so gloomy after a week so good in the equity market.
Welcome to Bloomberg Surveillance.
In the next hour, Sarah Hunt of Alpine Saxon Woods on the equity market, constructive on energy, in the same way Chris is. We'll talk about that a little bit later. Your equity market this morning to kick things off this Monday. Equities positive by 0.2%, following the best week of gains for the year so far. From New York City, good morning.
threats coming from militia that are aligned with Iran are totally unacceptable, and we will take every necessary step to protect our people. We're not looking for conflict with Iran. We've made that very clear. We're working very hard to make sure that the conflict in Gaza does not escalate, does not spread to other places, whether it's here, whether it's elsewhere in the region.
Another weekend of intense diplomacy. U.S. Secretary of State Antony Blinken speaking to the press during an unannounced trip to Iraq over the weekend. Blinken continuing talks with officials in Turkey through this morning. Let's touch on the price action for you. If you are just joining us, your equity market is still elevated by 0.2% on the S&P 500, following a massive week of gains of close to 6% on the S&P. In the bond market, yields aggressively lower through last week on a 10-year, back down to about 459.53. 2 weeks ago, through 5%. This is a 40 basis point plus turnaround from the highs of a couple of weeks ago. Plenty of notes out there. This from Savita Subramaniam over at Bank of America. Brahma, you might like this one. The S&P 500 had seen a 10% pullback from the July peak. Not atypical given that corrections happen one time per year on average. Despite today's better entry point for equities, the frequency of clients asking, should I wait for a better entry point, has increased. Gives you the feeling that over the last week or so, it's like Blinken, you missed it maybe?
That's exactly what I was going to say, is that you get this sense that maybe the rally has legs just simply because so many people were waiting for the time to buy. That said, the idea that cash still provides such an alternative, as Warren Buffett showed over the weekend, that basically is having record amounts of cash that actually are earning something. I wonder how much that keeps people hanging out and waiting for a better entry point. But so far, based on the rhetoric that I've been hearing, out of all of the notes, it was saying, yeah, this kind of feels like it's got some staying power.
The financial markets are so peculiar, aren't they? You pick up the phone to a client, you try and sell a bond with a yield of 5%, they're like, they're going to go higher. Then they drop back down to 450, they're like, yeah, can I have some? It's so weird.
It's
so
FOMO.
weird.
It's just sort of collective FOMO.
Isn't it odd?
It's, yes, of course.
I find it so
Psychology of
strange.
crowds.
Let's get beyond the price action and talk about the intense diplomacy we witnessed once again over the weekend. Joining us now is Julie Norman, the co-director of the UCL Centre on US Politics. Julie, always wonderful to catch up with you. You've articulated this, the pressure to articulate an end game, given what's developed over the last couple of weeks. Do you sense that pressure is ramping up once again over the weekend?
Well, I think it is, John, and very much from the U.S. increasingly on Israel, mostly behind closed doors, but starting a little bit more publicly as well. And this has really been an issue since after October 7th, to try and figure out what would be next for Gaza after an Israeli operation. There are many different options that are considered, but really none of them seem to be very good for either Israelis or for Palestinians. Israelis and Palestinians are not looking for a reoccupation of Gaza. Some have floated the idea of the Palestinian Authority, the West Bank governance, having a role in Gaza, but they are very weak, very illegitimate, and also, I think, would not take on that role just yet. And the U.S. is even exploring some options of saying having a multinational transition kind of a group there, some kind of almost like a peacekeeping force. But again, all of these are very tentative options, and I think crucially right now is trying to identify what Gaza might look like after this in a way that is, not just a continued downward spiral for both Gazans and Israelis.
Julie, as we can all see at the moment, the administration domestically facing pressure from all corners. Julie, from your position, can you identify any kind of success this administration is having, convincing the Israelis of having some kind of humanitarian pause, convincing Israel of changing its approach somehow? Is there any kind of success you can identify?
Yeah, John. So I would say, right, the U.S. came out very strong in support of Israel, and some in Israel have called this a sort of bear hug, a public embrace, but also a private restraint and kind of some whispers in the ear. So this has started from the beginning, and I think most importantly, Blinken was pushing for a humanitarian pause over the weekend. That does not look forthcoming at the moment. Some areas where they have had some success is starting to get a bit more aid into Gaza. There are currently about 100 trucks now coming into the Gaza Strip per day. Before the invasion, that was about 500 trucks a day, so still much less than is needed, but more than was coming in for several weeks. The other area that they had some temporary success was getting communications reinstated in Gaza, but I understand over the weekend there have been more blackouts, so that seems a bit inconsistent. So I think that pressure for humanitarian pauses will continue. For Israel, I think they see that as perhaps halting the offensive, and they're halting their overall aim of ousting Hamas. But for others, that is just seen as absolutely necessary for both getting aid into the Strip and getting people out. So I think Blinken will keep focusing on that. And I would note Netanyahu suggested that if hostages were released, that might open up some room for a humanitarian pause. So I think we'll see more focus there in the coming days.
Julie, what I found more interesting, rather than Tony Blinken going to Israel, was all of the other meetings he's had on this particular tour. Right now, he's in Ankara in Turkey. There's a question over Bill Burns and his relationship with Jordan, the head of CIA, and his tour in the region. What is our sense right now of some of the regional countries and their position, their involvement, both in what's happening now, negotiating with Hamas, but also some solution after this conflict is over?
Sure. So I think there's a couple different facets to this. One is, again, the short term, trying to get other Arab states to also back this idea of humanitarian pause. Most leaders are very forthright about calling for a full ceasefire. So Blinken was trying to get some space there, as well as just keeping diplomatic channels open. The second was really in terms of trying to keep the conflict contained and trying to avoid flare-ups in other Arab countries and in other areas, especially like Iraq, where U.S. Troops are stationed and where there are Iranian proxy groups operating. So trying to kind of quell any potential flare-ups and just further dispersal of this conflict. And the third, as you mentioned, Lisa, is again trying to look ahead to what that end game might be and what the role of Arab states might be within that. Again, would Arab states be part of some kind of multinational, transitional authority or force or something like that? Again, right now, I think most Arab leaders are reading the room pretty clearly with their own populations who are very sympathetic to the Palestinian cause and are not going to stick out their neck too far for really what the U.S. is pushing for. But at the same time, work quite closely with the U.S. and some of these states with Israel as well. And so needing to kind of find that middle ground. So a lot of diplomacy happening that I think will be just continuing wholeheartedly over these next couple of days.
Has President Biden lost the room with his own party at this point, given his approach on this conflict?
I would say it's very clear that the Democrats have a lot of internal divisions over this conflict. And this isn't new to Biden. And I think he knew with an issue as difficult as Israel-Palestine, you are probably never going to please everyone, especially in a party like the Democrats, which are pretty split on this issue now. He's getting a lot of very vocal criticism from many on the left, from many progressives, and from many on the pro-Palestine side. But I think he's also getting a lot of support from more traditional liberal Democrats who appreciate the solidarity that he's shown towards Israel. So in some ways, again, it's you're not going to please everyone. And again, right now, the U.S. is trying to find a very difficult middle road and kind of thread this needle between supporting Israel, but also trying to minimize casualties and think ahead to what might be next and what might be best for the region.
It's going to be incredibly difficult for the president going into next year, Julie. Just to finish on that poll from the New York Times over the weekend, big leads for the former president Donald Trump in Arizona, Georgia, Michigan, Nevada, a lead in Pennsylvania as well. Julie, your thoughts on that as it came out over the weekend?
Yeah, this is going to be a big wake-up call for Democrats and for the Biden campaign. We've been seeing these neck-and-neck numbers for Biden and Trump for quite a while, but to really drill down to the 6 swing states and see that 5 out of the 6 Trump is leading with less than a year until the elections is quite notable. And again, this is a little bit different than past elections because both of these men are known quantities. Everyone, and someone like Trump, everything is out there already. So I don't see a lot of this necessarily changing. Obviously, polls a year out are a year out. But I think for Democrats who thought, Trump was going to be an easy target or something like that, it's clear that Biden has a lot of work to do. And that's, it's going to be challenging for him to keep his coalition together. So I think we'll see some different strategies emerging pretty soon.
Hey, Julie, thank you. Julie Norman there of the U.S. Center on U.S. politics. Thank you. Where you find comfort is always the risk, right? You can sit here and say it's 12 months out and do nothing about it, and you end up in the same place in 12 months' time.
There is a very real question about whether these 2 individuals are going to be on the ticket come next November. There is a real aversion in the population for us getting a repeat of what we saw 4 years ago, and yet that is where we're headed, and that is the most likely tie-up. So there really raises this question, for one, is this a wake-up call for President Biden, and does he get the message that it's him losing?
Sure.
It's not Trump winning. And number 2, who would that be? And can we consolidate or see some consolidation around some of the other Republican candidates?
The 12 months of this still to come. Another year. Is that why TK's taking a day off?
I think that, Bloomberg or whatever, people are calling us now.
I got the same message as well. TK's back in a couple of days.
Don't worry.
Looking forward to getting Tom's view on all of this. I think you know it already. Jeff Yu of BNY Mellon is going to join us on the FX market in just a moment. Live from New York City, this is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
Earnings season is here.
Tons going on, lots of earnings.
Beat wherever you look.
Bloomberg breaks the numbers first.
It's a tale of two earnings. Results from Goldman Sachs, Bank of America, and Morgan Stanley.
Netflix is out, guys.
With exclusive expert analysis.
Recovery is underway.
They crushed it. It was one of their best quarters ever.
This is a story all about pricing power. We're going to make more money. We're going to make more money. And we're going to make more money.
You're making bank. And I think that is what we could take away.
Bloomberg Television and Radio. Context changes everything.
5-day winning streak on the S&P 500. Can this become day 6? So far, longest daily winning streak going back to July, I believe, June to be precise. Equity futures on the S&P 500 positive here by 0.16%. On the Nasdaq, we're positive by 0.2. The scores last week, the Nasdaq up by 6.5%. The S&P 500 up by 5.85. Bramo, we talked about the banks briefly. If you are just joining us, the banks last week, KBW Bank Index up 11%. Best week of the year.
And you've been pointing this out, the irony here. We were talking about how higher yields are better for banks. Yields drop, ostensibly on weakness in the economy, and banks rally. So try to make sense of this from a fundamental perspective. I think there was a breath of relief, especially allowing people to see earnings, which have been better than expected pretty much across the board.
What was it in the bond market? And let's check out the bond market together. 2-year, 10-year, 30-year, and just sit on a 10-year portion of that curve. 459.53. So 2 weeks ago today, we had cycle highs of 5.02%. I'll round that up. Was it the data? Was it the Federal Reserve? Was it the Treasury refunding non-announcement? What was it?
It was a recipe.
All of the above.
Yeah. Well, it was sort of this slow progression. First came the refunding announcement, and that really turbocharged the rally on the long end. And then you saw the Fed announcement, and that turbocharged the rally on the front end. And then you saw economic data that sort of leaned into this idea that we are seeing the slowdown that the Fed wants. And that just turbocharged all of it together. How much is this positioning, and how much is this? Just fundamentally, that people are realizing that maybe they got a little over their skis.
On a 10-year, 40 basis point move off the highs in just, 10 days?
It was
a couple
crazy.
of weeks. Kind of nuts, to be honest with you. Let's finish on foreign exchange. The euro had a fantastic week, largely because the dollar had a terrible one. The euro coming off the best week of gains since July on that currency pair, 107.46. We're positive again this morning by 0.1%. Under surveillance this morning, Israeli troops encircling Gaza City, effectively cutting off the north of the Gaza Strip from the south. Israel's military saying its ground forces took control of a Hamas base in the area, while its air forces attacked around 450 Hamas targets in recent days. The Washington Post reporting the Biden administration is growing frustrated, Lisa, by the number of civilian casualties from Israel's campaign against Hamas.
So there are a number of questions sort of embedded in this. Number one, how much influence does Washington have over Israel at this point, especially given the fact that Netanyahu is not exactly the most popular politician and most Israelis want him out. But then there's also this question of, is President Biden losing the room with his own party? And we keep talking about that. How does he try to massage their role in a conflict that has polarized society across the world? And I don't know the answer to this.
It's certainly an extreme wing of his party. Did you see the protests in Washington over the weekend?
I did. I have to just be honest. Part of my difficulty with this is that nuance is lost in this discussion. It's very difficult to have any kind of nuanced discussion. It's very difficult to have the view that is horrific to see children and families being killed in Gaza or starving or suffering with dehydration, at the same time that it was a horrific massacre in Israel that cannot happen again. It is very difficult to have that conversation, even though that's just human.
We'll try and have that conversation through this morning. I think it's often the case, Lisa, criticism of Israel is conflated with anti-Semitism. It's very difficult not to conflate the two, though, when you see a protest taking place in the nation's capital with certain flags being waved and certain slogans being held up, and seeing those slogans defended by people who are sitting in Congress. That makes it very difficult.
Rashida Tlaib of Michigan coming out and saying that from river to the sea, Palestine will be free was a chant of freedom, and even her own Michigan Democratic colleague calling her out and saying, no, that is not what it has meant historically, please retract it. All of these things are such a difficult moment because, yes, it is difficult to have nuance, but some of the imagery has been clearly associated with historical tropes that are anti-Semitic.
Without a doubt, and it makes it very difficult for the president to try and navigate these issues. 1 year out from the 2024 election, President Biden trailing Donald Trump in 5 of the 6 key battleground states, according to a New York Times poll showing Biden down big in Arizona, Georgia, Michigan, Nevada, and Pennsylvania, while holding a narrow 2 percentage point lead in Wisconsin. Biden won all 6 of those states in the 2020 election. At least a big wake-up call for his party, for his leadership over the weekend.
So who takes his place?
Big question.
And the fact that Kamala Harris was actually doing better than him in these polls.
Which is kind of shocking, given her favorability rating that we've seen over the years.
It is completely shocking, which raises this question, will President Biden simply say, well, just wait, we have 12 months, it's not a big deal, or will there be a very deliberate effort to try to come up with who might replace him on the ballot next year? We don't know exactly what this ballot's going to look like.
We did a poll with Morning Consult in the last couple of weeks. I know you guys talked about it around this table. I think it's worth repeating. 3 in 4 swing state voters said the country's economy is headed down the wrong track, and they're more likely than not to say their personal financial situation was better off under Trump than it is under Biden. Now, is that better off pre-pandemic versus post-pandemic, or is it better off under previous leadership, under current leadership?
Honestly, I was reading this too, and I was thinking to myself, okay, on one hand, you've got different economic cycles, and the person in charge is going to get blamed for it, whether they're responsible for it or not. The bottom line is it going to be economics that drives the election cycle? Is it going to be what we're seeing internationally with geopolitics? Is it going to be something else, the sort of social issues? We don't even know that, let alone the cast of characters that we're going to be dealing with at that point.
Janet Yellen's under pressure.
Yes, she is.
Taking some real stick at the moment over the way she's conducted affairs over Treasury issuance and all that kind of stuff.
Well, is it really tied to the financing needs and having some predictable sense, or are they trying to time the market and basically cater to the fact that they don't want to really disrupt anything on the long end?
I bring up Janet Yellen because she's also going to have an important meeting with her Chinese counterpart later this week over in San Francisco. This really setting the stage for the bigger meeting we're all expecting between President Biden and Xi Jinping at the APEC summit later this month. Is there any incentive whatsoever for this current president to play happy summit time with the Chinese leader going into next year?
No, there's not, except for one thing.
What is it?
Just getting some sort of de-escalation over in China so that at least people aren't worried about that geopolitically. That maybe that allows people to focus more on other things. That said, it'll open him up to criticism, as you point out, rightly so, during the election cycle. Hey, you're buddy-buddy with Xi Jinping, really? Yeah. And that's not going to fly, and it hasn't politically.
They're spinning place at the moment. Big time in this administration. Really difficult stuff. If you are just joining us, equities are positive by 0.2%. We had a massive reversal in the bond market over the last couple of weeks, through 5%, back down to the 450s on a 10-year. Let's get to Jeff Hughes, Senior Market Strategist at BNY Mellon. Jeff joins us now. Jeff, were those highs the highs of the cycle?
We can easily revisit those highs and higher up again. We tend to think of this as a symmetric process. You know, things ramped up very quickly, yields ramped up very quickly, and they can come down just as quickly. Well, let's go to the Bank of England's monetary policy report. You know, their third judgment clearly said this is going to be asymmetric. The process down is going to be slow. Let's look at the RBA tomorrow. After 6 months of pauses, they're going to start hiking again. Looks like a new economic cycle has ticked up there. If you look at how the real estate market is doing, and actually, if you look at the UK, US, Australia, you could argue these are very different cycles, but all dealing with the same issue. You know, demand isn't going away anytime soon.
So, Jeff, what do you think is going to stick around that ultimately leads to a retest of the yields we saw over the last couple of weeks, given developments we saw last week from the Federal Reserve and in the economic data as well?
services inflation globally is going to remain high. I think that's the bottom line. If that's what the ECB is even worried about, arguably the major economy with the softest in services impulse in terms of growth. I think the market is falling into this sort of trap saying, okay, unemployment rate's going to tick up to 4.5%, 5% or anything like that, and really start to drag down wages. We saw during the post-pandemic reopening, what companies will run into when you actually lay off a lot of workers and there's a labor supply shortage. There's going to be a lot of labor hoarding up ahead, which means the unemployment rate is not going to go up aggressively, and also the labor market is going to remain relatively robust. So in that sense, I don't think services growth, price growth is going to go away anytime soon. It's far too early to be talking about easing, so just beware of that sting in the tail.
If Treasury yields have not seen their peak, if they are going to go higher, does that mean that the economy is strong enough to also support risk appetite?
Well, it really depends where you're looking at, but I think with the US, right now, we're talking about US exceptionalism. I think for the time being, the US economy is strong enough to sustain the status quo, right? So, of course, we're going to look at earnings, and I think the way, if I look at our flow data, what our investors are doing right now, they are going into equity market risk, but in the most conservative way possible. We're seeing them buy consumer staples, seeing them buy utilities, getting some kind of defensive protection there. But from an asset allocation basis, there is cash on the sidelines waiting to go into equities as well. But that's just a positioning view. So again, from a sectoral allocation point of view, still very, very cautious out there.
What do you make of the idea that gold just keeps rallying? And we were talking earlier this morning with Chris Verone. He likes gold, and he thinks that it's going to be an alternative as people kind of shy away from all currencies that are getting debased on some level from both inflation as well as incurring a greater amount of debt. Do you buy that?